TIP Day. It's the first time in which we approach the market and our investor in introducing our non-listed companies. In order to welcome everybody, thank you very much to all of you to be here with us. For us, it's quite a very important day because really it's the first time in which we do this. Thank you very much to all the entrepreneurs and the CEOs that today will introduce their very excellent stories. Thank you very much to our team, the TIP team that have always supported us with the high quality of their output. And you know that quality for us is an obsession. I mean, this is a key word for us. The reason why we decided to do that is because after years, especially myself, I've always received the fact that, you know what, you are invested in very important listed companies we have been knowing for a long time, but we don't know about the non-listed side. And so we decided to do that today because our non-listed companies are stronger than ever. You will see that. You will see that during the presentation. You will see that in their figures. You know that we always said that we are an asset class ourselves. And you see also our performance that of today. I think they are quite impressive. And we are a proxy to the medium-sized businesses. You know that we have been working for now, next year will be 25 years of deep experience. We've always worked with family-owned businesses, and doing that for us is really a job. So consider that. I think we have discovered a few years ago also those excellent companies you will see today. And also for them, it's the first time in order to introduce to investors their businesses. The 9 companies not listed, plus Dexelance, that is, as we call the new entry of last year's, that is already listed, but it's a deal we succeed on May of last year. The aim here is to introduce them because they are all potential IPOs, some in the next few months, some others in the next, we hope, just few years, very much depending. Today, I say much more to the market than rather to the companies themselves, because you will see they are all ready. So, having said that, the agenda of today is very tough. Each of the CEO has 20 minutes in order to keep the agenda under control. There will be no Q&A session, but if somebody of you have questions, then you can address them at the light lunch directly to the CEO that you have seen already. There will be a coffee break in order to survive also, because a coffee break here in Italy is always a good experience. And that's it. So I just, in order to have a context in which we move today, I leave to Giovanni Tamburi to start with which is our idea in terms of scenario as of today and the idea of the future short term, so it's easier. And so that also for us and for the investment and what the company will tell to you, there is a context in which you know we move. Thank you very much, and as we say, enjoy.
Thanks, Alessandra. Fantastic introduction. Let me thank you for this organization, because you've been working with our team on this venue for very many months, because it's, as you said, it's the first time that we do this. Also because we are very well recognized for many of our listed companies, but not so well known, as she was saying, for the non-listed. But non-listed leaders in the market that anyway represent 1/3 of our global valuation. And it's a lot of money, 1/3, and it was compulsory for us to introduce them to you, to let you know the plan of those companies. And I can add something to what Alessandra said about the future of those companies. I think that at least 5 of those companies that you will see today will be going public, as was suggested before. Not andare in borsa, but going public, which is a different concept, in the next couple of years, maybe more. And therefore, TIP will continue to remain one of the best, let's say, group that will nurture our stock market. In terms of general contest, I don't know what is going to happen. I have reserved for you a copy of the book that I recently wrote. I recently finished to write because I spent something like 4 years to try to have a picture of what we can imagine in the financial industry in Italy and in the world. And it's very difficult. As some one of you can remember, I started my last letter to the shareholders saying strana tempora currunt, because it's very strange, because all the Occidental world is basically slowing down or consolidating, which is much better sound, but the markets are at the highest level ever. Why that? Basically because in the United States, $7 trillion have been given to the market, have been given to the citizen. And therefore, this is inflating all the world. Another strange aspect of that, as you all know, in many cases much better than me, is that most of this high level of the listings are made in United States by very few stocks, and in Europe by banks that have the privilege, have the fortune of having been benefited by the government, because most of the risk has been given to us, to the citizen. And therefore, the fantastic balance sheet, the fantastic result, the big buyback, the big dividends of the bank are basically justified by us taking the risk and not they taking the risk. Apart from that, one of the most important things that I see from many months, and who will have the patience to have a look at the book, will see a couple of chapters on that, will be a sort of structural change. I would not say crisis, but structural change in the private equity industry. For 20, 25 years, the private equity industry has been growing a lot. Now it's slowing down. The exits are a big, big problem for the world. They have $3.5 trillion of unsold activities, of unsold business, and this is going to go to the market. In the meanwhile, the M&A activity is going down. After so many years going up, 23 on 22 is less 26%, 23 on 21 is less 41%, and this implies that all that industry that has, let's say, exploded the multiples, exploded the values, is sort of rethinking, at least, those things. On the other hand, the private equity industry is continuing to have good fundraising, but the issue is that the exits are very complicated, and not only the $3.5 trillion will be a problem, but also the fact that with this M&A industry, of which the private equity industry was, in the last few years, between 40 and 45%, therefore a fantastic portion, a very important portion, will be on the market very soon. This implies that we will have a lot of companies for sale. This implies that for people like us and like our very acquisitive companies, like all of the companies that you will see today, will have fantastic occasions. Values are going down, and who is plenty of cash, who is willing to grow in this period will pay less, will grow more, and will make, in my opinion, a lot of good business. In this context, and I finish, the banks are very timid, to say the least, because regulation on the one side, the risk put under the government on the other side, and let's say the end of the big leverage, because just to give you also here a couple of numbers, the leverage that was applied in the last few years is going down dramatically. Now the banks are normally financing around maximum 4 times EBITDA. In the past, they were more than 6 times as an average. And therefore, this will be another element. I finished to say, connecting this day with the context, that my impression is that the IPO will explode in the next 2 or 3 years. It's a very courageous statement, but if the bank don't give the money, if the private equity world has less money to be spent, the company that want to grow are obliged to go to the market. And therefore, the real message today to all of you is to have a look to those fantastic companies that we are very proud to present to you today, with the aim of bringing public all of them, possibly all of them, or at least a good portion of them. Welcome again, and thank you for being here.
Yeah. So we start in this wonderful shop that is completely brand new. We have to say that. That's marketing, more than just... So I introduce to you Andrea Cipollone, who is the new CEO of Eataly. Please, thank you.
Thank you, Alessandra. Thank you, and welcome everybody. Few words before to start about this store where we are today, because I think it is interesting also to better understand what we are doing wherever. We are in a store that we've refurbished in 3 months without close any day, and so you can understand I don't want to say the new philosophy, but the new concept that we love to have. We have one store with only 1 restaurant and not 3 restaurants, very big but very flexible. We are in the room where yesterday night there was the birthday party of Ornella Vanoni with 200 guests, and in the meantime we had the normal restaurant. Exactly what happened today. We finished yesterday night at midnight, and we are here today. We love this kind of things. If you look at the store also later, you can understand that we try to give more experience to the customer using the QSR, using our fish department, for example, etc., etc., but without have a lot of restaurant. Why? Because in our country we eat only from 12 o'clock to 2 p.m. and from 7 p.m. to 9 p.m. and it is very difficult to give the feeling that you are buying products. In the meantime, people are eating in the restaurant. Very often you buy the products and around you have empty restaurant. For this reason, in North America it is easier because they eat practically from 10 o'clock to midnight. But here we are sure that this new project is the one that we want to have, and the first results are really, really good. Also, to give you an idea of what Eataly is, this store is the 10th store in the ranking of sales. It's a big store, it's an iconic store, but in our company we have store with 3 times the sales of Smeraldo, 1, and 6 store with double sales than Smeraldo. So, big store, but the company around the world has a lot of important store. So thank you very much, Alessandra and Gianni, for deciding to have this important meeting here, because for us it is also an opportunity to show you what we are able to do. I had one short video. I think that we can start from this one. you. What it is Italy today? We are speaking about a company of 900 million euro sales, considering the sellout of the franchising, 670 million euros if we consider only our direct store. We have 54 stores in this moment, 27 directly operated from Italy Spa. 21 in franchising and 6 stores in the travel retail channel. 5 stores in franchising, 1 store operated directly from us. If we see the sales split, you can see that Europe in this moment is 32% of our sales. 53% comes from North America. It is true that our main business is there, but also the rest of the world is very important. For example, we have 50% of our sales coming from, in particular, Middle East and other part of the world. And if we see the split by products, you can see that 37% of our sales comes from retail, 30% from restaurant, 10% from QSR. In this moment, we have already 15% of the sales come from franchising and concession business. And what we call other, the party of yesterday, the meeting of today, and our school, it is another important part of our business with 9% of the sales. If we see the split only regarding the North America has a different split. We have 50% of the sales coming from restaurant and 50% from retail. Before the COVID period it was completely different, but one important heritage of the COVID in US was that we increased a lot our sales in retail department, an important things for us. This is the work we are doing together. Our plan was built on 3 main building blocks. The renewal of management, it is something that we absolutely need to do very, very, very fast, very quickly. Then focus on cost optimization and margin enhancement, and other important things, because our business model absolutely must become more profitable. And then we are working on the acceleration of development of our current network and also the development of the new format. As you can see, we consider the first block achieved, done, and it is because in the last months, in the last year, we had the opportunity to hire a lot of new manager. We were able, in my opinion, to attract a lot of very good manager. And in particular, what I like to say is that we didn't have to invent anything. Only people with the right skill and with the right experience, and people who love this opportunity and this project. So we hired a very experienced group CFO, a very experienced CEO of North America. That is very, very important for us, an Italian guy with other 3 experience in Italian company in North America. And so we are absolutely sure that we build a very good team. And there was also a good number of talented managers that were already in the company with a good potential and with the good attitude. And we are working on them to let become a better manager. But this mix is very, very important for us, because we have people that push a lot for more efficiency, but also people that are very focused on our DNA, on our history. The mix of the two is very important for us, and it is working very, very, very well. I'm sure that we absolutely needed to do. In my opinion, they wouldn't have been able to do anything different than what they have done in the past, and we absolutely have to change. What it is important to know, also speaking about Italy, is that we no longer have any shareholders involved in the operations. In this moment, the company is completely managed from the management team. I start to show you some KPIs, just a couple of KPIs. When coming to numbers, there are three areas where all the work that we have done so far can be summarized. First, gross margin. It's improving at group level by over 3% in 2 years. In a very particular moment with a very high inflation, we were able to improve practically wherever in Europe and in North America. We are at 59% in this moment, and it is a very good margin if you consider the split of the sales coming from retail. But we are working to achieve 63% in the next years. Productivity is another areas of greater inefficiency. I can also say that was the biggest problem of the company, because as I told you before, 3 different restaurants, 4 different restaurants, clearly you have a lot of labor cost. We are doing a very good job. You can see the productivity that is increasing wherever, and it doesn't come from the retail price, because in this moment it's very difficult for us to work on retail price, but it comes from completely different scheduling and completely different organization. We are in this moment in a very good level for the European business. We have a lot of things to do in US, but we are working hard. And also, if you look at the EBITDA margin, this has already jumped by almost 4% in 2 years. We are in this moment at 7.5%. We know that we can do really better, and it is what the management team has to do in the future. Another important building blocks was the development, and here you have an overview of what we have done in the last 12 months, and clearly if you compare with the past, there is something completely different, both speaking about speed of execution and also discipline of cost. 2 examples. We opened a Roma terminal in only 2 months, and we can say that it is a very important store, and the results are really good. People appreciate it a lot. And also we opened the first store with smaller sites, 2,500 square meters in Sherway Gardens, our second store in Toronto, with good results, both in terms of capex and in terms of results, sales and margin. What it is interesting, in my opinion, is the ability of the company to convert the pipeline in real project. This is the overview of what we want to do in the next months. In the next 18 months, we will start in November with Short Hills and with Dresda. And as you can see, we are working on a lot of projects, especially in North America. We will open also the first Eataly cafe, planned for the Q1 of next year. I will explain you better later what we are speaking about. We will open multiple locations in JFK Airport in New York, and we will open our first store in China in about 1 year. But we continue to receive requests from landlord, real estate developers, travel and retail operators. They all want an Eataly store, and they are very often available to significantly invest to have it. Because in the end, Eataly shift the balance. Very often, if you consider, for example, our store in LA, we are speaking about $65 million store, an important store. We opened practically where before there was a parking of the mall. And in this moment is the best area of the mall. And for this reason, we find a lot of landlords that want to invest. For example, in concession business, Eataly give to the airport operator the opportunity to go in private negotiation instead of to participate a tender. What we think is that we have to open where there is a lot of traffic. And it is another thing very different compared to the past because at the beginning we were sure we were a fantastic traffic builder, but remain traffic builder for 20 years is very expensive. And for this reason, in China, we are opening in one of the best location with one underground station with more than 10 million people per year. In Toronto, we will open in Eaton Center, one of the top 3 malls in North America, but also with one inside one train station, very, very important. And for example, Dresda, that is not one of the best railway station in Germany, but we are speaking about 50 million passengers per year. Speaking about concession business, that was something that we discussed a lot at the beginning of our work together. So we started from the huge success of our store in Fiumicino. We are speaking about one store of 27 million euros of sales with the Italian retail price, and we practically only restaurant. It is the largest and most successful single restaurant in an airport globally. It is impossible to find another store with only one brand with this kind of sales. So here we have a lot of opportunities. We have already signed one contract with SSP. We will open 5 stores in the 2 airports in Paris, Charles de Gaulle and Orly. We already signed one new location in JFK with a Volta, and we are very, very close to sign the contract for other 5 locations in the US airport, but we will have surprise also for the Milan passengers very, very quickly. I think it is interesting for you also to understand who are in this moment our partner. We are a very good partnership with Volta, the old Autogrill and Dufry. We are speaking about 12 billion euros company. SSP is a 4 billion euros company. And also MSC wanted to have one Eataly restaurant in their last ship, and we are very satisfied to do also in terms of brand is very important. And we take care about our brand. We think that is the main asset of Eataly. Our brand, like a lot, has a very good awareness wherever in the world. And this year we tried to do both, to have the right visibility, but also to participate in the right way to the important event like the Amerigo Vespucci in LA, the US Open. It is another important thing for us. And we will be the restaurant or the Italian pavilion in Osaka 2025. Abroad, very often, we are an important partner for the Italian institution. We understand very well, in particular, the 2nd of June, when everybody calls us to have the part inside the embassy. Another important thing, speaking about our Italy brand, we started from zero last year. Last year, today, we didn't have any product branded Italy. Today, we have 50 SKUs, and in our opinion, is a very good opportunity inside the store, where the margin is higher by 15%, but in particular outside the store, because you can find our product right now in the airport, in the duty free of Malpensa, for example. But everybody are asking us for this. It is not a private label. Private label means branded products, same quality, less price. It is a brand product, completely different compared to all the other competitors. What it is, Italy Cafe. To be very fast, it is one Starbucks with our quality, with our brand, with our food in particular. Clearly, it is. We think that it could be the game changer, because clearly open 200 square meters is faster than to open 4,000 square meters. Starbucks has 38,000 stores around the world. We are speaking about a store with 250 square meters. We will open the first two next year, one in Rockefeller Center, the second one in Hudson Yard. We think that in 3 years we can have at least 100. It is a franchisable store. We are absolutely sure about it. Finally, our figures, we will close this year around 690, 700 million euros. It depends from the Christmas. Christmas is very important for our company, with an EBITDA of 53, 56 million euros. If you compare with 2022, that was the best year ever. Clearly, we are speaking about a completely different results, and our target for next year is around 70 million euros of EBITDA. I'm finished.
Thank you very much. Next, I ask to Andrea Sasso, and that is Chairman and CEO of Dexelance, and Mariella Moretti, who is Corporate Development Manager and Investor Relations, to join the stage. And from food to design.
Thank you, Alessandra. Good morning, everyone. And thank you to the entire team of Tamburi Investment Partner for inviting us today. We really appreciate it. I'd like to launch a small and brief videos that will give you a brief introduction about who is Dexelance, please.
Welcome to our world. We are firm believers in the transformative forces of design. We are dedicated to curating and showcasing the finest Italian and international brands, which epitomize the pinnacle of craftsmanship and style. We create specialized poles of brilliance with a cohesive team of more than 800 people, integrating 14 distinguished brands and 11 companies, routed on our shared values. Our commitment to excellence is reflected in our selection process, where we meticulously choose companies that exemplify a harmonious blend of elegance, innovation, and timeless beauty. Our mission is to inspire and enrich the lives of our customers by infusing the essence of refined living into everyday experiences, ensuring that at the core of everything we offer lies the art of crafting design for excellence.
Grazie, thank you. So, as you have seen and heard from our institutional videos, you understand that Dexelance is a distinctive platform in the design sectors. I mean, from 2015 till now, we have 11 companies, 14 brands, 800 people, We arrived last year to a sales about 310 million euro, that it was our ever record sales. By the way, there are many kind of different industrial platform in the sector. Why we are different? And then I'd like to go to page 3 to show you why we are different from other forms of aggregation. Mainly for two reasons. First is that we are an industrial and strategic project with a very long-term vision. And this is very important, and we strengthen also this long-term vision, being listed last year in 2023 with the contemporary entry of Tamburi Investment Partner, strengthening our credibility to be a long term, with the having also TIP helping us, supporting us from a financial strategical point of view. This really permits us to be very attractive, not only from new partners coming in our pool, but also to attract talents. And believe me, I'm to be listed on the stock exchange really give you a fantastic opportunity to have talents. We have 11 companies in the province, in the middle of nowhere of Italy, so to strengthen the organization there is more important to have the excellence beyond their shoulders, and also, to attract talent. On the second, message very important is we are different because we are focused to keep, to maintain, and to preserve the DNA and values of the original families. So, out of 11 companies we have, still in 9 companies we have the original entrepreneur, at the helm of the company. This permits us to help him and the full organization to do exactly, to have a common objective, to accelerate in the growth. So we are operating in the industrial corporate as consultant in order to help them in all the things that they don't like to do or they don't want to do. And this is very important, we'll see later on. Then, going to see the market where we are operating, Bain defined our market as core high-end design furnishing market. So the high price positioning, there is the excellency. As you see here, this is a very resilient market. In the last 20 years, this market was growing with a rate of 4-5%, achieving, an entire level of 47-48 billion in 2023. By the way, which is important to underline is that Italy is a leading country, having 25% of market share. But there is a but. There is not one unique company called Eataly SPA to have this 25%. But the market is really fragmented in hundreds and thousands of fantastic, nice companies, small companies between 5 and 50 million euro sales. So this is exactly an opportunity for us because we have the possibility, really, to have new partners in the future with excellent brands that we can help in order to increase their market share. I don't want to enter here in all the 11 companies, 14 brands, and so on, just to give you an impression that in our portfolio we have only brands with high-end price positioning and with strong complementarity in function and style. So we were very, very small overlapping, because when we are choosing company, we are not collectors, of companies, but we choose not only the brands, but above all, the entrepreneur, as to fit with all the other entrepreneurs we have, because trust is the magic word in our team. Then here you can see, our distribution network. Again, we represent a real benchmarking for the entire Korean design furnishing market. So, our sales is 55% of retails, for example, and 45% in contract. Italy, from a geographical point of view, is the #1 market with 26%, but we have also US with 21%. From, a channel point of view, from a strategic business point of view, 45% is the furniture, and then 27% is luxury contract, lighting 10% to serve the contract, and so on. Which is important to underline is our distribution network. 9 directly operated stores, 45 monobrands, but managing and operating by different retail partners, and which is important is to have 4,500 retail partners. This is really vital, because if you are able to increase, as we have done in the last 4 years, at least 1% of each single shop that is managing to buy 2 or more brands of our company, we have really a boost of our sales. Then, you have seen that the market was growing in the last 20 years with a path of 5%. From the single moment that each single company is entering in our system, in our partnership, we are able to accelerate their organic growth to the double of the average growth of the market. So 10% is the average from 2015 till now, that it was the date when we were born. On the other side, we are acquiring company, or better, we have partnership with our companies. And then we were able to grow to a total compound annual growth rate of 38% from 2015 till now. So somebody define us an M&A machine. I don't like too much because in reality we call, the entrepreneurs that are entering in our companies like partners. We respect them. We want them to the helm of the company. We have done, in 2 cases only, a succession plan with managers, but preserving the DNA and values, very important in the entrepreneur. Above all in the entrepreneur in Italian, where DNA and values, sometimes managers are not so able to keep and maintain. On the other hand, it was successful, involving also the original family. This is very important and vital, not only because we are good people, but because in Italy, our entrepreneurs are representing the best testimonial of our successful business model. If we do something that is not correct with them, then no other partners will join us. And these kind of things permit us to be really different from other form of competition and aggregation. Here you see a story of strategic consolidation in the sector. At least each single year we are able to add 1 company. In certain years we have done even 2. And then this is very important because, again, trust is the magic word. Sometimes when we are doing a strategic 3 years plan, we are obliged to do being listed in the stock exchange, but in reality the best idea is coming from the entrepreneur when we put them on the same table. For example, we are doing also some meetings with the first line of the entrepreneur, so sales director or supply chain director and so on. And this permits us to have a new idea and to get the famous synergies. Synergies we are able to share, for example, designer, we are able to share area manager, we are able to share international subsidiary and so on. It's not so common, at least in our design sector, but I think also in some other sector. Here you can see that still there are a wide pool of opportunities. Each single dot that you see in this map is representing a real company. So we have already mapped 450 companies, 250 already contacted, 40 are in the target list. And this is only in Italy. So there is a huge opportunity to continue with an M&A successful step. Here you see how we are helping, our entrepreneur. Because I said before, what we are doing things that they don't like to do or they don't want to do. So, for example, in the moment that they are entering in our group, for example, typical finance, the majority of our entrepreneurs, they like to do products and communication. That is their storytelling. The name of the company sometimes, much often, is the surname, and the name and surname of the family, the original family. So from strategic support to monetization, from knowledge sharing to go to market. For example, for a company of 10 and 40 million euro sales, it's quite difficult to open a subsidiary in China or in US or in UK, as we have done in the last 3 years, for example, because we are able to find the right manager, a manager that are telling no to them, they are coming if there is Dexelance behind the shoulder. From digital transformation to retail management to, structure, for example, the business. This business model is working very well, and from the moment that we were listed in the stock exchange, a lot of meetings we have with very, very high-level brands. There is a good storytelling and word of mouth beyond us, and I repeat, our entrepreneurs are the best testimonial about this. Last slide before to leave the floor to Marella. Here I don't want to enter in the numbers because being listed in the stock exchange, I'm sure that the investor already knows everything about us. Just to say that 2023 was the best year ever, 310 million euro sales, 17% of EBITDA margin, and also, only 40 million of bank debt, which is important to underline that even in 2024, a year of normalization phase of the market, that in reality started also in 2023, because, till 21 and 22, this sector, the design sector, was really benefit from the COVID. I have to tell you, everybody was discovering the house, being in a cage, and then everybody was buying a lot of sofa, furniture, and lighting, and so on. This kind of thing is finished a little bit. Normalization phase, it means retail going a little bit down. Having also the project, the world of projects still growing, above all in hospitality, for example. And then it permits us, really, this is the moment to invest in order to nurturing our brands. Nurturing our brands, continuing to invest in visibility, sales network, organizational structure, and so on. Not many of our competitors are doing the same in this moment. They are cutting costs, they are cutting capex. This is not what we want to do. We are investing a lot, don't looking too much to the profitability in order to be in the best position when the market will come again in growing opportunities. So it's time to give the floor to Marella. Thank you for your attention.
Thank you, Andrea, and good morning, everyone. So, as Andrea just mentioned, the last 9 to 12 months at Dexelance were really focused on initiatives and investments in order to foster the brand's visibility and strengthen their positioning about all the group brands in the existing and new strategic markets. Talking about US, for example, as Andrea mentioned, in the last quarter of 2023, we launched a new subsidiary there with new headquarters in Lexington Avenue. With a local sales team that is helping all the different brands that has been built throughout the months, with a back office team as well that is able to manage import and export sales in order to serve locally an important market such as the US one. Along with the opening of the new headquarters in Lexington Avenue, we also opened up 2 stores on the ground floor of the same building, one dedicated to Meridiani, the other one dedicated to Davide Groppi. But then in May 2024, another furniture company of the group joined the building as well, which was Gervasoni. Gervasoni is another furniture brand that we have and opened up a new space dedicated to both its indoor and outdoor collections at Lexington on the mezzanine floor. And I can tell you that we are also working on opening of another floor that will be dedicated to 3 more brands of the group that will be probably open by the end of the year. So we will need to find a space for our local sales team once again that will be needed to be moved upstairs another time. So definitely US is a key strategic market for Dexelance, not only because of the size of the domestic market, which is of course huge, but it's also because it's a very important window and place to be for the international specification of projects and community of interior designers, architects, and lighting designers. So we're really targeting to have a strong and solid distribution network in the area, on top of the business that we are already generating there, thanks to the projects of 2 important companies of the group, Cenacchi and Modar, that produce luxury contract projects, so custom furnishing already in the area. So talking about commercial and marketing activities to support our brand's awareness and visibility, of course, I think that all of you know what Salone del Mobile is. It's a very important trade fair for the industry, a reference and a benchmark, international benchmark for the design industry, not only because of the number of participating companies, but also for the very wide population of visitors that we always have from both private people and professionals. This year, the number of visitors increased sensibly again, and we are proud to say that Dexelance has been the only Italian design group participating with 7 brands at the trade fair. So we were there with all the 6 furniture brands that we have, and also with the Vianova, which is our kitchen brand that recently joined in 2022. And this was particularly important for Vianova because the kitchen world doesn't have the opportunity to participate to Salone del Mobile every year, like furniture, but they have a biannual participation. So due to COVID, Vianova was not able to participate to the fair until since 2018. So it was very important for them to be there. A lot of traffic at the stand, a lot of success, and we're really happy that we managed to bring all of them there. On top of the participation at the trade fair, all the brands, also lighting, that were not allowed to participate to Salone this year, but will be next year, had a lot of initiatives taking part to the urban circuit of Salone del Mobile, which is Fuori Salone. For example, Davide Groppi took the chance of the fair to launch and open up a new store in Milan. That they already had a space in Milan, but this is a new one in Via Manzoni. It's wider, it's more central, and it gives the opportunity to really experience the light and the DNA of the brand, which is very peculiar in the industry. And the opening was also the occasion to showcase the second art masterpiece of the Dexelance for Art initiative and collection, which was Concetto Spaziale by Lucio Fontana, that was displayed at the opening and is still displayed at the showroom at Via Manzoni. On the same week, Meridiani had a special event fully dedicated to the newly launched René M chair, that for the occasion, there was this installation realized with 3 pieces with a triple size with respect to the usual one, and completely covered with this special fabric branded with the company's logo. And the installation was conceived to be very social friendly and high catchy, and in fact it created a lot of traffic on the company's social medias, a lot of posts, a lot of stories for people just passing by and taking a picture on the sofa, on the chair. So it was really a success as well. During this important week, we also had Gervasoni taking the opportunity to celebrate the 20th anniversary of the Ghost collection, which is probably its most iconic collection, 20 years of age, but still in the top 3 selling collections of the company. And with this installation, it was really high-catching and some sort of provocative in order to show the highest level of configurations and customization options the collection has. I'm about to finish. Just saying that there's not only Salone del Mobile, there are many opportunities abroad also to increase visibility of the brands all around the world, like 3 days of design in Copenhagen, and we were there in June with 2 more furniture brands, Meridiani and Saba, because the professional community in Northern Europe, also because of the sensitivity they have to design, is very important and crucial for us. So again, we really wished to be there. And lastly, one thing that makes us really proud is that in June there has been an announcement of the Compasso d'Oro Awards. Compasso d'Oro is one of the mostly renowned and recognized international awards in design here, and it's an Italian one. And Davide Groppi has been awarded with the 3rd Compasso d'Oro for the Anima lamp, the 3rd of his life, and the 2nd mention of honor for the FM lamp, which is again a great achievement, because there are not that many living designers that can boast so many awards in design like Davide Groppi. So thank you very much for everyone.
Thank you, Morella, and thank you, Andrea. Gabriele Burgio, CEO of Alpitour, to join and start. Thank you very much.
Yes, thank you for the opportunity to present our company. We have a small video, which in tourism I think is rather nice to see. So if you can go. So today, Alpitour is a company that is #1 player in the tourism in Italy. We are formed by different businesses, we will see in a moment. Italy is a base for tourism, very interesting. It's about the 5th or the 4th country in the world for visits, and we are #1 in all the UNESCO sites, as you know. Our company is in 23 is about 2 billion turnover with 141 of EBITDA. And in terms of margin, 7.2 margins for us is a record because the company, since we took over, has always been about 1-2%. And when I joined the company with 1% EBITDA, I couldn't sleep at night because 1% of EBITDA on sales is rather worrying. We have invested, of course, over the last years, and now we have a international presence, which makes us a credible player when we go around to sign contract with other countries. For example, we have 16 countries where we have direct subsidiaries, even China, because during COVID with Neos, our airline, we had over 500 trips to carry to Italy masks and other medical equipments. And so we have a headquarters there. We go with our routes on our planes more than 55 countries, and we have hotels and in different countries, especially in Africa. The company can offer our clients more than 2,000 alternatives hotels, but in terms of opportunities of holidays, we are millions, because when you combine the duration, the site, the prices, we have millions of opportunities which are now managed by a very sophisticated system of digital systems. We have 25 resorts. We have built a 5-star company in the last 5 years. We are already the 3rd in Italy in terms of 5 stars, and we are in Taormina, Venice, Florence, Rome, etc. And we believe very much that this segment is now appealing a lot to international tourists that are coming to Italy, especially looking for top-end service. We never stop investing in the airline. One for sustainability, one which is also in terms of airline is consumption of fuel. We have the most modern Boeings available in the market, the 737 MAX and the 787 Dreamliner. And I think that we are very proud to say that our airline is one of the youngest in terms of average life of our planes. We are about 7 years of life. So which are the basis of our business today? I think it's a company that is based on a business that is growing. All the numbers from the WTTC, the World Travel Tourist Council, all the numbers made by different institutions, foresee the tourism as a growing business, about 3-4% every year. And in 2030, we should arrive to 2 billion trips annually. So it's enormous. In Italy, it's already 12-13% of GNP, about 10-11% of labor. So it's enormous. Although a little bit like on your case, many small companies are composing the offer that is available. We are a little bit different from that. But what is important for us is that we are in a business that is basically growing. We had, like you, in 23, an explosion of interest for vacation, of course, because after COVID it's all well known, and now it's slowing down, but the base is that it's really a growing business. We are different from other companies because we have not only the tour operating that organize the holiday, we have the planes to carry our own tourists, we have the hotels, and we have, in different countries, we have what is called the DMC, so the organization that receives the tourists and takes care of them with buses and other stuff. So we are a little bit obsessed with that because we think that once we have sold one holiday, we can have the margin of the tour operator, of the airline, of the hotel. So the commercial effort to gain one customer creates 3 margins, and this is very important. We are building this concept on direct lines. For example, from Milan, we can go directly to Madagascar we go directly to Maldives, we go directly to many destinations, and people like the fact that they don't have to change their plane, or the famous 4 or 5 hours in Dubai or in other place. We have now a lot of combination to appeal every single customer. So we have products for low cost or products for high cost. We have made many investments in technology, because when you move only with the tour operator, we move 1 million people on a holiday. We have a lot of transactions. Still is very complicated, the purchase of a holiday, a travel agency, payment, down payment, confirmation. The transactions are millions, and so technology can help us a lot in simplify all the process. In fact, you'll see the results in terms of profitability that we are beginning to see in a very strong form, because all the changes we are making are producing cost savings. After COVID, not only we survived, the company was built in 1947, so it's a long story, and you saw in the movie the first travel agent in Cuneo. The first trips were organized from Torino to see the Caselle airport. So they were going with the bus in 47 and 48. They were going to the bus to see the taking off the planes. So that was the holiday, you know, to go in the afternoon to see the. And this is growing, has been growing, and now I think the company is, after COVID, created a new way of working. We were forced to find a new way of working, and basically we doubled our results, only with the same level of sales, because we made decisions during COVID that probably without COVID we would not have made. The urgency helped us to take very serious decisions. So today the company has composed in many different, we have different independent company, although they're all under the same strategy, of course. The tour operator is about 1.4 billion of sales. Record results in Europe, 3% with the tour operating. Tour operating is a very poor business in terms of margins, but allows the planes to fill the planes, to fill the hotel, so you have to see it into an integrated system. Is about 1 million people, and we have 6,000 agencies that work for us. And the aviation is one of the best performing companies in the sector in Europe. We have more than 10%, 10% EBITDA. One bank the other day told me, yes, but you have this performance due to the 23, 24. So I took all the last 10 years of results, and NEOS has always been between 9 and 10% every year. So it's a solid company and is growing a lot, not only serving tourists from Alpitour, but about 50% are tourists from other companies, or independent travelers that want to go to Maldives or to Africa independently from us. We have the hotel company composed of two main areas: the beach, where you have normal hotel on the beach and the sun and the palms, or the 5 stars that I was saying before. Again, it's a very successful company, and this year we should be going over to 200 million of sales. And then we have the incoming, which is a company dedicated to, as I said, receiving the customers to the destination. So in terms of brands, as you see, we have different historical brands in Italy. For example, the Alpitour is a Franco Rosso, is another very famous brand in our business. And just to tell you the difficulty talking about brands, Franco Rosso was bought by Alpitour about 20 years ago. I was not there, of course. And people are still asking me, and they say, but Franco Rosso is yours, it's from Alpitour, 20 years after. So it's a long process. In the hotel business, we have the Voi, which is what I said before, the beach hotel, and Viretrizzi is the top end of the offer. And then we have Neos. I think Neos is very well known in Italy, and is the airline, which is really helping the building of our products in a very constructive way. Where do we have our results? The results are Although we present the results in this form, as you see, 29% of the EBITDA from the tour operating, 49% of the aviation, and 21% of the hotel, in reality it's not like this, because the aviation would not be making these results without the traffic that the tour operating is creating. So this is really what comes from the balance sheet, but in terms of really synergies, this is not the right way to see it. Market share, as you see in Madagascar, traffic, the Italians to Madagascar, which is a very attractive destination, we have 62%, Dominican Republic 47%. Egypt, last year we did 310,000 Italian tourists to Egypt. Few weeks we had 50 flights a week from Italy to Egypt, okay? So they're really very important numbers. These are numbers that are created by with the local authorities. We have the statistics of how many Italian passports have arrived, so they're really clear ones. So CapEx, of course, has been a factor. We have grown a lot in the last years, a lot, and some of the major fact was when TIP entered in 2017 with a capital increase. That helped us to buy one competitor, which was really the only competitor we had, called Eden from Pesaro. And due to the capital increase, we bought Eden, and the synergies were incredible because we were basically making the same business, and cost cutting, you can imagine. I mean, it was really, and I'm pleased to say that we had no problems. Was an M&A. I did many in my life, but this M&A was really clean, pure. We have no noise, no problems, etc. And the rest of the investments, many are made on buying hotels. So these investments are what we spent, but not what we now have in the balance sheet. For example, the 2 hotels in Taormina, we spent 60, last valuation are about 200, 210 million. So this is what we invested, but not what we really have now. Later, we bought this hotel Arenella in Sicily. Was a fund. This is in line with what Gianni was mentioning before. This was an hedge fund. They bought this hotel Arenella. They were not doing really well. The fund was liquidated, and we bought at a very, very, very low price. Very low price. So what is driving our strategy? So the first point is that the company, when I joined, was intermediary. So they were buying hotel rooms, planes, seats, put them together, put the margin, and sell it to the travel agents. So value added was really low. I'm trying to have as much as we can owned. So if we have our own hotels, we control the price, we control the distribution, and as I said before, we can have the game of the 3 profits. So this is an expensive strategy, but over each time we do something like this, the margin of the company then go up. The travel agency were a barrier from making relationship with the customers. So a lot of money and time is now developed to focus on the relationship with the customer, the famous CRM. Was all done by analog. When I joined the company, they had these yellow sticks on the wall with the prices, and the prices were made like this. Now we have a very sophisticated system, and this concept of going from analog to digital in our business is absolutely fundamental. And of course, we go from an egoistic approach to the environment to an eco environment. So what happened in the last years? In 17, when TIP joined, we had about 1.2 billion of sales. This year we have come close in 23 to 2 billion. EBITDA went well, I would say, from 46 to 141. As I was mentioning before, the percentages are really improved, and I think this is a result of what we have been doing with the technology. Net profit, of course, there you can see the issues with the COVID was a disaster. In 2021, we went from 2 billion sales to 480. So you can imagine the drama to manage such a disaster. Net financial position, I think we are okay now because we had 140 of EBITDA and 200 of debt, net debt, because we have the SACE, you know, the SACE instrument that saved a lot of companies in Italy, so we have debt, but we have a lot of cash, so this is the fact. So where do we think we can get now? We have revenues, I think we should be around 2.3 next year. The demand is strong. Winter is started strong, so we are positive. 25, we should see another jump of our EBITDA, not more in terms of percentage, but more in terms of quantity, because a lot of things are coming and coming into the system in 2025. A net financial position, I think we will keep more or less the same, because I think this is very well sustainable for the company, and we can invest in other assets and other investments to keep creating value for shareholders. So I think I'm okay.
Thank you very much, Gabriele. And so from traveling back to manufacturing, and I ask Roberto Ciceri, CEO of Beta, to join us.
Okay, good morning, everyone. My name is Roberto Ciceri. I'm the CEO of the Beta Group. Thank you, Alessandro and Gianni and the TIP team for giving me the opportunity to introduce the group to you today. A few of you know it already. We call ourselves unconventional thinkers due to the fact that in the past century, our company is 101 years old. Until last century, an Italian company would not be allowed to think it was entitled to be a leading brand in a technological field like the professional hand tool business that we're in. The Germans first, the French before them, the British, not a Mediterranean company like Italy. We proved them wrong. Today we are in Europe, and I will later on explain to you why I'm constantly speaking around about Europe. We are today the leading single professional hand tool brand in Europe. This is a video that sums up what we are.
Like any other, it's a verb that defines us as human beings. That is why whenever we do something, some of us are convinced that there is only one way to do it well. Just like Beta. In Beta's world, everyone for 100 years has been channeling their energy towards one single goal, doing every single thing to achieve excellence, driven by 4 values. Audacity. To invest and constantly relaunch an enterprise created by an Italian craftsman, which has asserted itself worldwide and continues to grow after 4 generations. Commitment. Because every reseller knows he can count on a reliable and timely service, and every user knows he can rely on the precision, quality and resistance of better products. Harmony. Because when something is well done, it expresses a perfect balance between function and design. Talent. The one thing that distinguishes all our people and every professional who chooses Beta to leave nothing up to chance in the engaging and passionate fulfillment of their ideas and dreams. This is what makes us who we are. Us and everyone who uses, follows and loves Beta. Convinced by nature and vocation that there is only one way to do things, doing them well.
Well done, dominant performance.
We are not to financials yet, but let me show you who we are. Today we are basically an Italian group. We were born in 1923 out of the Beta company. In 2016, TIP joined us, and we basically kept our values. We stretched our vision. We dramatically improved the way we execute our strategy. We started an acquisition path in 2016. By now we have purchased 6 companies, and then twice we merged 2, so basically we are 4 acquired companies and the beta company, the group basically 5 companies together. We have 10 headquarters and manufacturing plants based in Italy. We have 11 subsidiaries, we will see later on, in the world, 8 of them in Europe, becoming 9 soon. Why no international acquisitions? Not for our mentality or culture. I myself spent a few years abroad. I lived abroad. I was born speaking more than 1 language. Our managers are mostly bilingual or trilingual. This is just a matter of opportunity. Italy offers tremendous opportunities for our purchasing activity, and we insist in that direction. We looked abroad, never ended up with a solution, not until now. We are open to it, but as of today, this is what we are. 11 subsidiaries worldwide, as I said, mostly in continental Europe, 3 overseas being in China, Brazil, and USA. The reason being that our business, which is a very fragmented business among many, many brands, is basically a continental business. It was born basically last century and stayed very continental. The Americans, until they came and bought companies in Europe, stayed in the USA. Europeans stayed in Europe. Asians were born and stayed in Asia. 60% of our group export, which account for about 41% of the total business, is performed by our directly owned commercial and logistics subsidiaries. Our revenues, just to give you at a glance what we are, it took my family actually 92 years to go up to 125, 130 million. Then Tip joined the company. As I said, we stretched our vision, and today we doubled our size in the past 8 years. Not only through acquisitions, also by internal growth. Let me also point out, as some of you have done before in their presentation, we had a COVID year, which was particularly tough for our industrial activities. And 2021 was a supply chain mess in the world for our business. We reacted, and I would say we reacted better than most of the companies in our business at a European level, and we were able to perform like you see today. The revenue breakdown with the acquired company is as follows. So Beta still accounts for over 70% of the total. The 4 other companies for less than 30%. These companies are typically, of course, smaller companies, weaker companies. When we buy them, we integrate them, we make them stronger, we give them a different perspective. It takes time. In our business, it takes time to be able to reach this level. And we will see later on, this also is true for our profitability. It takes between 2 and 4 years to be able to bring these companies up to our original Beta profitability. R&D investments, we spend around between 5 and 6% of our turnover in investments for product development, industrial investments, of course quality. And this is quite stable over the years, even though we are growing. We do keep the figure 5-6% stable in the years. Our people also grew with our revenues. I consider the new generation, the 5th generation of my company, 2016, starting in 2016. So we went from 500 to 1,030, actually a little bit more today, 1,050 staff. Our goal, what's our goal? Our goal is to be the leading provider of hand tools, power tools, and MRO equipment for the professional end user. MRO standing for maintenance, repair, overhaul, or operations. Who is the professional end user? He's typically a guy or a company working in the maintenance of automobiles, industrial maintenance, energy, ground transportation, aeronautics, oil and gas, hydraulics, electricity, craftsmen, you name it. Whoever takes something in their hand to do something is for us, professionally of course, is for us a potential customer. Our commitment is to be an outperforming solution provider to our distributors. We do not deliver directly to our end users. We go through a network of distributors. 3 points: outstanding product quality and design, an uncomparable logistics performance, and a legendary brand. Brand in our business is very important. So talking about product quality and design, let me show you some pictures of basically what we do. We do hand tools, power tools, workshop equipment. We work on connectors for electric cables, safety shoes and workwear, abrasives, welding equipment, fittings for wires and ropes. Our distribution is much wider than this, and this gives us a very interesting potential for growth in the future. Logistics, as I mentioned, we deal with over 40,000 SKUs, and our logistic performance is about being at any day during the year above 96% of FPA, which means first peak availability. Simply speaking, you send us an order of 1,000 SKUs, we deliver within 24, 48 hours, 960, 970, 980. The remaining products, being very important, delivered maximum 1 week. The average of our industry is between 70 and 75%. So this is a top performance on our side. Brand. We have been quite famous in our industry for our brand. How have we invested in our brand? Of course, the racing world. Some of you may know that we have been in the racing world for quite a long time. So we started in the late 60s, 1968, by using the motor racing world as a communication mean, but also a very strong partnership in terms of technical growth. They stress products, they give you information, they allow you to grow and to develop better products. We are still today a highly requested partner for the Formula world of racing. It's not about only Formula 1, it's about Formula 1, 2, 3, 4, and other categories. We are just about anywhere in the motorsports, in the MotoGP world, MotoGP, Moto2, Moto3, Superbike, Supersport, just about in every team. Same relationship, we give them products, they give us back information, we learn, we grow, we improve. This is really about my family at the beginning. We have been dedicated well before ESG waves, late waves that we are encountering now. We have been very much dedicated to sustainability. Basically, we work with metals and plastics, so steel and plastic, all recyclable. We had a problem on packaging. We worked on packaging. Right now, we are very much into recyclable materials for packaging. We are going heavily into solar energy. And we, of course, do a lot for our people internally. We help mostly our families in terms of university and school education. Our solar investments, very quickly, 4 major plants in Italy are almost all well above 50% of energy autonomy. We produce our own energy. This is increasing. The only limitation being a law in Italy that allows you only to do 1 megawatt per plant. I hope this will change and we will keep on investing on this. Welfare, as I said, school and university education. This is a late idea that we had in the company. We do not pretend that we can encourage birth or adoptions, but we do give out, we do help economically our families when they decide to make such an economic effort. We also do some social contributions. What you see here is just an example, a device. We put together our technicians, a bicycle manufacturer and a wheelchair manufacturer. This device allows a person that has problem in walking, basically, to go around 25, 30 kilometers at a speed between 0 and 15 kilometers an hour, and of course improve her mobility. Little bit of facts and figures. We today, as I said, still basically perform over 2/3 of our turnover with a beta company. As a group, we used to be actually higher at export. We purchased companies that were basically domestic companies. So we increased back again the domestic share of our market, which is, as I mentioned before, little less than 60%, a little over 40%, but growing the export share. Interesting to see that this is performed mainly in the continental European market. We have our own subsidiaries that are our best performance in Europe. Actually, these percentages may seem low at a first glance, but take Spain, for example, with 4.1% of revenue with respect to the overall beta group. We perform about 10, 11 million in Spain, and we are the number 2 brand in the market with this share. As I said, a very fragmented market. In France, with 7%, we are around 13 to 14 million, and we are number 3. The remaining countries in Europe being managed by independent importers. There will be some changes because the model is definitely, for sure, implementing more direct controls through subsidiaries of each single market. But here again, in Portugal, 1.25%, 3.5 million of revenues. We are the first leading brand in the market. So we believe altogether in Europe we total make a little over 90%. This is actually not a problem for us, basically, in a 20-minute presentation for this reason. This is a 20-minute presentation graph. How big is our market in Europe? Our market is basically on total hand tools. Hand tools is everything, so it's very hard to say which hand tools are our hand tools, but it's over 12 billion, in which, getting down to something that is more understandable for us and more referable to us, mechanics hand tools makes up for 4 billion, auto repair hand tools 4 billion. In Italy itself, the market for mechanics hand tools is 500 million. We have a share between 22 and 24%. This is just to say, by the way, in other businesses we're in, other industries, this is just to say that when you play your game in Europe, the game field is much, much bigger than what we are today. Still tremendous room to grow available. 3 extra European subsidiaries, small subsidiaries, altogether 3.6% of our group turnover, around 10 million. Well, first of all, 10 million out of today's budget, 280 is not bad. But mostly important, it gives us a chance to have some small beacons, small windows in each very far away market and understand what's happening in the States, in South America, and in Asia. So altogether, rest of the world makes up for 10%, but is definitely not our strategy today. We have a long way, still a very long way to go in Europe, highly profitable, good opportunity for us. So we will, for sure, insist in the next few years, in continental Europe for our growth. What happened to our sales? As we saw before, we grew since 2015-16 up to last year's 259 euros. Budget this year is 59 million euros. Budget this year 280, 281. Where are we today? We are somewhere in between. Our market is between -8, depending on the industry, -8 and -14%. We are growing. And I have to say we encountered headwinds in the first part of the year. We are pushing back in the second part of the year. We are hoping to be somehow close to our budget. Where do we see our future? Well, let me first give you a glance at our profitability. Where do we see our future? Well, first of all, in our numbers, you may see that our profitability in terms of percentage versus net revenues decreased. This is due to two facts, basically. Acquisitions, companies that were less profitable than we were as a beta company before. Second reason, most important, we have embedded in our cost structures what we call growing costs. We estimate in a few millions today in our balance sheet, we have a few millions of what we call growing costs. We're spending money to grow. We're investing in growth not only in capex terms, but in cost terms. We will keep on growing like this. When I first met Gianni and he came to visit the company, he looked at the company a couple of times and he told me, you deserve to be a €1 billion company. I listened to him and we're working on that. So the idea is to keep on spending and to sail towards what we call our $1 billion target in the future. To an engineer, the right question would be when. The answer is confidential. I will not say that. Thank you. Grazie.
Thank you, Roberto. And I ask to Marco Valle, CEO of Azimut-Benetti, to join us and start. Thank you very much, Marco.
Good morning, everybody. And thank you for the invitation here. I'm Marco Valle. I'm at Azimut-Benetti Group CEO. And as I understand this is a starting point, I will start with a video.
What does it mean to be the first? As pioneers, we don't just lead. We lead with purpose to improve, igniting change to advance our world. We lead to trace a green path to protect the sea, inspiring action among shipyards and yachtsmen that, just like us, live off its beauty. Our actions speak louder than words, as we strive to preserve its enchanted existence for generations to come. We nurture talent to shape the future of yachting. As innovators, we create space for our people to dream and thrive, while building a legacy of high craftsmanship, unparalleled knowledge, and profound passion for the sea. Curating new onboard lifestyles, we free emotions, creating sea experiences that resonate deeply with the human soul, and its unwavering quest for the embrace of nature and love. It's more than just being the first. It's our commitment to our shared world.
This is what we are doing for a living. We are selling dreams. Selling dreams through some brands. Azimut-Benetti as a division for producing and selling boats. Yachting and Lusben for services, because we are trying to be complementary. And we are the largest private group in the yachting sector, and to be honest, it's not only in the private, also against the private. They said the one already listed, I think we are the number one right now. We have the greatest range. We started from 12 meters up to above 100 meters. And this is the complexity and the beauty of this company. And we are leading the ranking of the mega yachts since 24 years. This is what's happened over the last years in these strange sectors, the yachting sectors. Thanks to COVID, thanks to many other factors, like we heard before, the growth was incredible. And Italian producer leading this industry, and we are leading this industry among the Italians. So among all the mega yachts producer, as I said before, we are number one by far, and the second one is still Italian. And this has been leading for the last 24 years, and it's likely that that's also for the next coming year, because we are now giving the new data. We are quite, let's say, touching wood, we are quite sure to be also number one. Saying this, we are selling worldwide. We consider domestic market Europe. We are considering the external outside Europe. And we are producing in different shipyards in Piemonte, Liguria, Toscana, Marche, Brazil. This is our producer, where we have the yards. And we have offices around the world in terms of sales and service, especially Florida, where we have a structure of 25 people and more than 2 million rolling parts for the market. It is the most important market in the world in terms of boating activities. And we have people based in Dubai and based in Hong Kong / Singapore to cover the world, to cover the seas, because this is what we are doing. We deliver boats to the oceans. And saying this, we are selling through worldwide dealers, and we cover more than, let's say, 80 countries and close to 140 offices worldwide. When I said that we have the large range, it means that we have 13 product lines in different yards. We between, let's say, I would say in Torino, that is strange, but we are building boats close to the mountains. And in Tuscany as well, where we have both Azimut and Benetti producers. So we have 7 lines for Azimut, 6 for Benetti, more than, let's say, 30 models. That is the complexity, because different kind of production, different kind of clientele. We started from the small 12 meters boats up to the final custom boats above 300 million euro. This is exactly what I was just saying. 5 giga yachts, so we are presenting giga yachts. This is something that is it's a wow effect, but is the level of jewel that we can give as a Benetti. And we are covering most of the segments. We are not covering just sailing, not profitable, and fishing. All the rest is covered. So we are covered outboards, express, flybridge, sports, sport crossover, navettas, and all the names that now is very with the fantasy of the marketing strategists try to identify these new trends. And both with Azimut and Benetti. Azimut started for fiberglass, going up to Benetti where we do steel. So we are covering from express boats and up to the displacement boats to make giga yachts or mega yachts. This is our fleet. This is what I was saying, that is our complexity. The complexity means that we start with some day cruisers, and all the Azimut is covering up to the 40 meters. Production is also complexity. It's inline production, when we talk about small one. When we go to the subcontractor production, when we go on the above 24 meters. And of course, we cannot forget the fact that we have to be innovative. And when we said innovative, we try to say, okay, let's be innovative in a way that can increase the comfort on board. It's not just a question of to reduce, let's say, emission, like everybody is doing right now. It's also a factor of increase the comfort on board. The mistake that somebody can do is just to consider a boat like a transportation vehicle. Actually, it's not. It's a more comfortable way of living. It's much more common to say that it's close to a villa. Saying this, you live on board, you spend time on board, and you spend more time on anchor. So different kind of, let's say, electrification is just the way that you use on board without generators, without using, let's say, diesels when you are at anchor with no noise and trying to avoid what is the uncomfortable situation of the, let's say, of the diesel emission. So we have invested on of course, hotel mode up to mild hybrid plus. That is means that it's not just alternators, but also the engines that are pushing to create power for the batteries, up to the full hybrid system. And this is what we are just investing. We are just launched these new segments. The C deck. I wanted to have this kind of slide here because was launched in Milano last during the Salone del Mobile. We launched the boat in the Bagni Misteriosi, was 60 feet in the water, and together with the Lucky, that was the installation behind. So was moored by the moon at the time, and the idea is to try to cut our, let's say, emission level in terms of consumption. This is just some ideas how the interiors are and the way of, let's say, living on board. Benetti is the upper level of our brands, and is compared to none here in Italy, and is just a few competitors on another part of Europe. And we are building boats, producing boats, and designing boats from 35 meter up to anything above 100 meter. We are doing both in fiberglass and in steel, as I said. And the level of customization, of course, on this kind of products is, let me say, insane sometimes. And because you can have any kind of clients, and it's one-to-one client that can select whatever he wants on board of the boat. We are based in Tuscany, both in Viareggio and Livorno. And of course, our market is the world. This is just one, the last one. This is I wanted just to have a rendering of what we launched the last Monaco boat show. It's not even, it's just a project. It's the new Explorer, new Voyager. It's something that is will be a new trend for what we believe for mega yachts. It's 57 meter that is just launched in September. The end of September, during the Monaco Boat Show, as I said, we signed the first contract Sunday, so it was a good day. Some numbers. We are selling worldwide, as I said, and dividing what we call our backlog. It means what we already signed with solid contract and deposit. We have a backlog of, well, starting from January. This is I did because we compare with somebody's already, or other companies already, let's say, listed. Backlog of 2.6 billion. This was declared during the Cambo show. I can tell you that after 1 month is higher right now, this number. And it's divided in between Americas, Middle East, Asia Pacific, and Europe. So this is the strength of the company. We are selling worldwide in a proportionally or on quantum, or let's say that equally way, and spread out during the period. So in other words, we are not covering just 2024. We are also 25 to 2026. This gives us strength for the future, even if that the market probably will slow down. We are already covered for 2024 and 2025. And this is what was our growth over the last years. So it's solid growth, up to 1.3 last 2024. So we are using nautical season. Nautical season means September the 1st, August 31st. So to a certain point, we are already having the new nautical season. We have 11 months to go because September is gone. And this is our trend in terms of EBITDA. That is percentage-wise is higher than what is the turnover. And this is something that is another good number, so that is a net financial position that nowadays we are still cash positive, extremely cash positive, and not, of course, zero debt. Thanks to the fact that we have this amount of money, we are investing a lot in order to remain in this position, of the leading position as in this industry. And we already have a 3 years plan of 160 million, and we have just finished the previous 3 years plan where we invested close to 140. And most of them is, of course, part of them is a product, because this is the DNA of the company. Invest in new products. We are launching for the next 3 years plan 19 new models in Azimut and 9 new models in Benetti, just to give an idea. And of course, in order to have the products, or at least the yachts, that can be built in proper way, in efficient way, in a right quality, we invest in the manufacturing more than before. So 50% of that will be the heavily investment inside our yards. Again, Italian yards, partially just in Brazil. And we have a Brazilian factory, as I said before, only because historically we were present. We kept this present because of the high duty import taxes, and we are leading that market since now 15 years, more or less. Saying this, with these numbers, we believe that the last one is reachable, because we're already in. And another big challenge, 15% growth of turnover. And I do not share what is the target of EBITDA, but we'll be with that kind of increase, so you can judge. And as I said before, since we have a great backlog, 99% is already given. Saying this, really, I am the only one that I get the point. And I get the point.
Thank you very much. In saying I'm the only one, I can imagine the reaction here. Next is Matteo Curino. Matteo Curino is CEO of Curino SPA. Thank you very much.
Good morning, everybody. I'm Matteo Curino, and thank you very much for the chance to introduce our group today. First of all, I will not start with a video, because light belting is a little bit less known than traveling or a luxury yacht. So I will try to introduce a little bit what is Curino and our products. First of all, Curino is almost 120 years company, founded in 1906 in Biella as a leather company and a tannery. And we have been able to manage the company to become a reference provider of a conveyor belting solution. In other words, our core business is producing, selling and distributing process conveyor belt. The lighting belting sector is our vision of the world is quite simple. First of all, we think that the world will go towards a positive evolution of a digitalized, automated, and sustainable and ethical world of production and processing. As a lighting belting company, we serve production and processing, official equipment manufacturing, and industrial end user. The main point and the main characteristic of our sector is that is perfectly positioned towards a number of macro trends that will drive the growth and of which the sector will benefit. And this, I think, it is one of the main points to understand our company and our sector. First of all, there is a macro trend that is clear that is supporting and will support the growth of our sector and our company. Is automation. The The world and the environment of production is totally changing. Robotics, automation, IT, Industry 4.0 are impacting the world of production. This means having more complex and more expensive and more process conveyor belt. The second trend that is affecting positively our world is sustainability. The attention of the industries to decrease the energy towards the energy saving policies, to decrease the wastage into the production. For example, to optimize the cost of ownership, like reduction of the water consumption, or for example, also the booming of the recycling industries, are all trends that are impacting positively in the lighting belting sector. Another trend that is really benefiting and is a stronghold of Curino Group is the raising hygiene and safety requirements. Food goes in direct contact with conveyor belt. So the company that are able to provide solution and value-added solution in this application are a company that are solving motion and conveyance product through all the value chain in the food. Finally, and after I will leave you to the video that could summarize this concept. There has been the booming of the intralogistics sector, Amazon, FedEx, and also in our industries. The intralogistic is an industry that has totally changed the world of production and distribution and of logistics. This means more conveyor belt. So in order to summarize this concept, I will leave you to the introduction video of the company and of the sector.
From the entire food chain up to the supermarket shelves, from airports to logistics centres, belting is key for millions of industries around the world. As a mission-critical component, belting contributes to the continuous transformation of production lines and plants into smart factories in a context where automation and robotics are heavily revolutionising industrial processes. Our belting solutions are engineered to drive this rapid change forward thanks to a continuous research and development on raw materials, chemical combinations and state-of-the-art technologies. Curino's total quality-oriented approach is key to manufacture unique product systems, tailored to each customer's requirements. Thanks to a close customer proximity all over the world, we are able to offer high added value solutions tailored to specific customer requirements, quick deliveries, and a qualified 24/7 technical support and service. We are your local partner on a global scale. At all times, in all we do, we are inspired by sustainable and ethical values. We are strongly committed to respect natural resources and the environment. From over 1 century, innovation, quality, customer proximity and responsibility are the values that drive us towards the world of tomorrow. This is our mission. This is our passion for belting.
So belting is a niche market, is at the base of all the production and industrial process, or almost many of them. And the reason why my family is not selling the business, notwithstanding, and thanks also to Tamburi that has helped us not to sell the company during this year, there are a lot of private equity, financial investor or industrial company that are knocking at the door in order to enter in this niche market. I will try to explain why we are still very positive about the present and the future of our company. So, to outline some of the key investment highlights of Curino. I will deep dive just in the first 4 point because a matter of timing. But first of all, what is Curino? Last year, our total sales were 176 million euro, with a margin of 25-26%, 45 million, with a 3-year compounded average growth rate of 18% of EBITDA, totally organic, mostly organic, and with a cash conversion of 57%. The cash conversion conversion is not very brilliant because we are investing a lot, and we see the investment are really driven to sustain our organic and not organic growth. How we have been able to achieve this result? First of all, we are very focusing our activity and our strategy on mission-critical product, process, and application. So we are a pure player provider in a niche market, and we think to be the top, the best in class in terms of growth and mainly in terms of profitability. Second, we are very focused on innovation and diversification. We are very diversified in terms of geography, in terms of product range, and we are very focused on innovation. For example, in 2022, we have, and we are very proud of this, it's just an example, we have been able to develop and start introducing into the market some belts with antimicrobial properties. Many other companies has tried and have tried to launch this solution. The solution really EU certified, so compliance with the EU rules that are stricter than the American one, USDA, are made by Curino. Third, of course, our history is there, our heritage, the value embedded in our history has continuity, commitment, and consistency of our product are there. And this drives to the market a clear confidence in what we do and where we are going. The other point of our result at the basis and as a building blocks of our strategy are, of course, acquisition. In 2017, we have been able, we have introduced Tambour Investment Partners in our shareholder structure with a clear objective to be helped in kicking off the acquisition process. Since 2020, because it has required some preparation, we have been able to execute 4 acquisitions. Among these acquisitions, there is one that is Safari Belting System that has really a great potential, and we forecast a great success and satisfaction about this acquisition. Another point that is very interesting and that I will deep dive a little bit more is that between 70% and 75% of our sales are after sales market. So we provide first equipment to OEM, but thanks to the base installed of our product in all the different application and machine and conveying system, 70 or 70% of this application are driven by aftermarket. In any moment, people doesn't stop to eat. They have to package their product. They have to convey their product. They have to run their industrial process and to manage their production. This it means that in any case, they have to use our product. So partially our request is driven by CapEx investment, 20-25%, but 3/4 of our sales are driven by the installed base in the market share. So a strong and qualified market share is a great asset for belting company. Today we have almost 20,000 active customers. So there is a clear differentiation among our customer and our customer base. We have a solid European footprint base. We have 20 companies, mainly in Europe, but we are present in all the 5 continents, included Australia and Africa. And we think that the platform, the competence, the know-how that we have developed in Europe is the perfect base and platform to scale up worldwide. This year, for example, is a year for industrial company that is quite tough and quite challenging. The growth that is driven by our American companies that has been the target of our recent investment is sustaining our performances and sales. We have a robust ESG agenda, both internally and both in terms of value proposition. So we are designing our product in order also to help our customer to satisfy their needs in terms of ESG. For example, to design a transmission belt that helps the customer to save energy, something that helps them to achieve their target in terms of sustainability. Finally, we think that we have a unique management model because we are almost 1,100 people, and we have 20 companies. So the average is 30-40 employees, excluding the quarter where we are 300 people for each company. Each company is managed not just by a general manager or a chief executive officer, but by somebody that has a different mindset, entrepreneurial mindset. They feel the company as it is their company. This is at the base of our result and the fact that in the last years we have been able clearly to outperform the market and our main competitor results. So a lot of things I will try to go very, very fast. So first of all, I was saying sales by customer, 1/3 to OEM, 1/3 to end user, 1/3 to distribution. Sales by end market. We sell to a number of vertical industries that is very interesting. Our stronghold is food, and for many industrial group, Curino could be a potentially a trophy asset because of his market share in food, but we are also present in packaging, conveyor manufacturing, corrugated paper and printing, raw material, plastic and rubber, and of course material handling, etc. Sales by product. Of course, we have an articulated and technical, very technical product range from a conveyor and process belt to modular belting that is the fast-growing part of the market in which, and we have acquired a company for this reason. Flat transmission belt, coating plating, timing belts, etc., etc. But the sense and the meaning of this slide is another. The mission-critical function of our product. Very simply, the incidence of our product within a system or a machine is less than 1%. But it affects significantly the function and the efficiency of the machine itself. In the case of downtown, the cost outcome 5-10 times the value of the product just for 1 hour downtime. There is another point that 60% of our sales have a content of tailor-made. So they are co-designed or tailored for the customer itself. So switching costs are quite challenging, and usually, not just for Curino, but also for other company, the attitude of our customer is risk-free. They don't like to change the supplier. So this is a great asset in terms of market share, but it is also a big challenge because we have always to convince additional customer to change from a competitor of us to Curino. Finally, of course, branding and customer relationship are something that are very important because to stay close to the market in terms of services, it helps you also to understand where the market is going, the needs of the customer, and to be there in order to be the first to innovate, to change, and to be proactive into the market. So, as I said, I think the main content of this slide is another. The consumable nature of our product. For example, for food, our product have an average life less than 1 year, usually from 3 to 6 months, because they go in direct contact with food. So because of hygiene and safety requirements, they should be changed. For material handling, industrial, paper and printing, there are 1 to 2 years averagely the belt life lasts. So this it means that Also, as I mentioned before, when there are economic downturns, the company is able to perform and to keep its sales in a quite forecastable way. It means also that being innovative, and our challenge is keeping and strengthening our market share and to increase and to growth faster than the market, thanks to our strategy, to our innovation, to our ability to deliver to the market tier one solution and services. Last point about our equity story for today, as I said, acquisition is key. Our sales are concentrated in Europe, but we have a clear strategy in order. We want to become a global player in a niche market. So it means that we should increase our market share worldwide. So geographic expansion is a driver for acquisition. For example, we have recently bought a company in Turkey just some months ago. We have acquired the Safari belting system in 2021, and the turnover from $10 million went to $20 million almost. So with some synergies and with clear ideas how to go to the market. Another driver for acquisition is expanding selectively our product portfolio. In that case, we have, for example, acquired Kruse that are coating plate. It's a coating plating distributor. So it has helped us to penetrate more the printing industries and to make synergies with our product. Finally, of course, the increasing penetration of the existing end markets is something that could drive our market. What we look for is always to have as much as we can direct access to customer. We are very, very attentive to generate synergies, and our background is there, driven not by quantities but by profitability. And I hope within the year we will be able to finalize another little acquisition in the market. Okay, touch wood. Finally, some metrics. We are growing. Also during the COVID period, we have been resilient, and our margin was the same. After 10 to 12 years, this year, okay, we have been a little bit too much conservative. We will grow in sales, or at least, so this is a little bit not very optimistic. And our EBITDA will be the same. We will decrease a little bit. For some reason, one is the economic downturn. The second has a beta. We are embedded some growing cost. Our competition has cut the cost during this year. Curino has heavily invested in personnel in America, and it is a base for the future growth. Consideration for the future. We are really committed to list the company for a number of reasons, to support our growth, to step up in the size of our acquisition, because our ambition is to become a global leader in our sector, and we want to strengthen, or we aim to strengthen our competitive advantage. Also, being listed, it gives you more visibility, and this means to be able to attract more talent and also to acquire intangible assets in order to execute superior strategy in the future. Thank you very much.
Thank you very much to Matteo Curino, and I ask to Massimo Bardazzi, that is General Manager for the Apparel Division in Limonta. Thank you very much, Massimo.
Good afternoon, everyone. I want to keep it tradition. We're going to start with a video, if you can, please.
Cross-pollination is the best way to integrate new ideas with existing knowledge. Their fusion is the path to generate innovation and overcome the limits of today. This is where creativity meets transformation. This is the highest expression of the human spirit. History has taught us, since dawn of man. It's the only way new ideas come into being. It's the power of resilience turning into evolution. It happens also in industry. It's called cross-pollination. It's a synergy of expertise between different fields. It's the harbinger of progress. This is the secret to being the best. Luxury, innovation, and sustainability. This is Altera, a new era.
We wanted to start showing you know who we are as Limonta. I'll introduce the group in a minute, but the latest product we have developed, because that's why we are recognized on the market. We are not a company that sits still, despite being around since 1893. Paul is the fourth generation CEO and majority owner of the company. But we are a company that look at the future. That's we are perceive our client. Altera is a product that is made by synthetic fiber, by recycle, or cotton fiber, totally recycled, totally innovative, but it's processed in a tanning process which is old and everyone else in this room. So the process are all 70 years old, but the fabric is a fabric that is still in the future. So what we offer now to the market is something that's completely eco-sustainable, but have a touch of the leather that could be used by Hermes. And that's what we want to offer to the market. Textile is considered a sector which is a little bit older, let's say, mature, but we want to show our clients, we want to show the market that is a sector in which is worth to invest because it's growing and it's representing the future of what we are. We, as a company, we are a textile production, so we have a fully vertical production. So we do weaving, we do our finishing or ennobling. It's a word I didn't even know until the chow was done, and coating. So we are very, very diverse, very, very unique in Europe and in the world. Most of the company in textile are specialized into something. So there's some that does tailoring, like most of you wearing clothes from Biella, I guess, today. And as some is specialized in leather, some is specialized in technical. We are specialized in technical fiber, so predominantly nylon and polyester. And then we are specialized in cotton, but we are also specialized in silk, and we are specialized in printing, and we are specialized in coating, and we are specialized in automotive, and we specialize in interior. So the versatility of our group, it's almost unique, and it's quite incredible to see how it operates if you come inside. Our clients can come to us for a coat, can come to us for a bag, can come to us from a sofa, and there's a lot cross-pollination in the sector, like you guys have seen in it before. These are all collaboration, all special edition. We are able to provide all of that to all our clients. This is an image that I wanted to have in this slide because it represents an industrial operation in the heart of Italy, in Brianza. I myself am considered a foreigner because I'm from Tuscany, so it's not really a local. And starting in Limonta, I mean, I know the company for years. Just to give you a glance who I am, I've been working for 20 past years in the luxury sector. I've worked as a head of R&D or head of textile design. It depends the company, how you want to call it. Head of creative textile in the latest iteration. I work in New York, work in Amsterdam, the latest iteration in London. I work for Ralph, Tommy Hilfiger, Burberry. And what is unique about this company, no matter working in an international environment, what is unique about this company, we have a lot of people that come from actually the village in which the factory is built. The village is called Costa Masnaga. The Costa Masnagensi, right? Yeah, Staghesi, are actually the heart of the company. You have 2 or 3 generations of the same family that work in a company, which is important for 2 things mainly. First of all, the knowledge stays in a company. Second, we have an incredible talent creation program in the company that became so successful and so recognized that now we can attract talent from our competitors, which is in the area of Como, the area of Prato, and the area of Biella. Everyone knows you come into Limonta, you're there to stay, you're ready to grow. in your knowledge and your capabilities, of course, in your salary and in your recognition. This is our industrial footprint at a glance. We have 4 production sites in Italy, 2 companies in Asia. I'm going to expand later about that. One is the latest acquisition, what we did, BATM is a company in Korea, but I'll expand that later, but it's very important for us. Then we have a company in the US. It's a beautiful showroom. We think the North American market is a great opportunity for us. It's been for a while, and we have the nephew Paolo actually running this operation. Therefore, all the division that we have, and it's very successful at the moment. 830 people and 12 million fabric that we produce every year. So in Europe, this is a unique case for sure. It's another glance. I really love the factory, so guys, sorry for the repeating picture. We have 220 weaving looms, 95 of that is jacquard, which no one else in the world, bar none. Jacquard looms, for people that don't know, it's like allow complete flexibility. You can do whatever you want, there's no limitation. If you have an image of a picture, some of our clients come to us, have a picture, in 2 days, you have a replicated picture in a fabric form. And you can do your fashion show, Louis Vuitton, Dior, and so on and so forth. We have 6 coating lines that allow us to do the best fabric for bags in the world and from automotive. We have 50 finishing plants, 4 resination, 30 dye machine, a 20 digital print machine. So as I said before, we can do whatever is requested by the client. So we're very, very, very flexible. This is the way the company is structured. So we have division, fashion, which is what I'm responsible for. We have the accessories, so the bags, the footwear, and we have apparel, which we have piece dye fabric, jacquard printed. To be honest, we also do jacquard print in the interiors. We have the interiors division, which you guys use, and many of the big companies in the world uses it. And then we have Society, which is the only direct-to-consumer brand that we have in a company. Society sell bell linens. We have shops in Milan, in Rome, Geneva, just to mention a few, New York. And it's the only direct-to-consumer. So we offer this bell linen. I mean, I ask you to maybe to look at the website or to go to the shop in Milan to see exactly what we do. It's a very unique product offering compared to the rest of the market. And finally, we have the automotive. Fashion. What we are recognized for fashion. I remember the first time I started in Burberry, that was my last company I worked for like 16 years ago. There was the head of the creative director at the time, and they came to me. I think the second day I was there, they let me start on the 23rd of December, just to say. So we had to work on the 24th. And they came there and said, okay, do you know the 10 best fabric produced by Limonta? And at the time, I knew Limonta, but I didn't know that I had to remember all the name of the fabric they produce. That to see how Limonta is embedded on the mind of the designer worldwide. If you consider, just to give you an understanding, you guys wear suits, so you wear wool, but I think most of you sooner or later will start wearing Moncler, right? Because it's down. So if you wear Moncler, the fabric for your done by us. If you wear Prada, the nylon jacket, the backpack, the bum bag, this is done by us as well. If you're a lady, you wear a Dior bag with a Dior oblique, that's us. If you had a Louis Vuitton bag, the tan with the LV logo, that's us. Just to tell you who we are and what we represent on the market. For the interiors, we have a beautiful division. If you come into our company, we have this archive. I was like fascinated the first time I see. You have this beautiful array of arazzi and your carpeting and all intricacy of color and design and texture. And what we took all of that and we transfer into interiors. So we have a beautiful interior collection that today, if you are, I don't know, if you have a nice house, you have your B&B sofa, your Minotti sofa, you most likely sit on a Limonta fabric comfortably in your living room. Society is this beautiful brand that sells bed linens, and we have it direct to consumers, so we have a great opportunity. During the Salone del Mobile, we do a great event to showcase the product that we offer. And finally, the automotive. So we work mostly for fabric for Stellantis, Ford, BMW. If you have my latest car was a 500 Elettrica in London, and I think last time Paolo called me to offer me a job like almost 1 year ago. I was just going to Richmond Park and I realized I was sitting actually on Limonta fabric when I was offered a job to start in Limonta, which is quite. So see, this is some of the product we do. What I was telling before, one very important thing about being Limonta is just we can use information we have from different sector for each one of us. So you will think about automotive is completely diverse, the interior, and completely separate from fashion. But you can use the technology that you gain in that sector and translate it immediately in the other sector. The abrasion test that you do in automotive help us to make the lightest and most strenuous fabric you can do for down jacket. Now the fabric that we offer for down jacket is 10 denier, so basically it's something to use for your stockings, and it's used to do a down project for technical brands. And that's all only allow us to do that because we have this cross-pollination across the different sector. Heritage and expertise, industrial footprint. One, allow me to spend a little bit more time on that part because it's very important to understand what is important to our customer. We are a company that is fully integrated. Most of our competitors work in industrial cluster. I mean, most of you are Italian, I assume. So as you know, the Italian market for textile is very divided. So you have expertise in textile, expertise in finishing, expertise in enabling. Normally you have a company that gathers this information together, create a collection and sell it on the market. We can do everything inside the company. That allows us to offer a complete safe environment for all the brand to work with, have a complete confidentiality in the product, and have the ability to develop product at the pace that no one else can do on the market. The other part, which is fundamentally understandable how we work in the fashion world, especially the tailor research. Consider that a company like Limonta come out with 4 collections a year. So we have a collection we present to Milano Unica, mid-collection, another collection, Milano Unica comes twice a year. So when we do that, we present a collection, but that's a starting point. Then the head of the fashion houses come to our offices, or we go to them, and together we develop a special project, a special idea. It's something that allows the company to be unique. That company, that collection to be unique. With that, we are in a position as to offer this service, being vertically, no one else actually can offer to the client at the level of the speed, the confidentiality that they need. Another important part of our process is R&D. We have more than 40 people that work on R&D in just technical development. We sign, let's say, almost an NDA every month to work with startups and major brands around the world. That allow us to have, to be the benchmark for the sector to understand if its technology is mature enough to go to the market or if it needs development. So every brand in the world at a certain level start operating with us, and we offer them their level of security and technical knowledge for them to be able to go to the customer without any issue, any problem, and with all the trade compliance that are needed. Consider that we are to a point, I can't reveal exactly the name of the company, but in December you see our logo being embedded in the garments. So we're going to be a label inside that say this fabric is made by Limonta. It's so important. We became so important as a technical partner that this company asked us actually to be able to be named on their garment, which for us it's a great way to start expanding a label. As you can send to be a business to business, it's very difficult to develop a label because you don't have visibility. This is allowed to be, let's say, something to relate to you, maybe a new Gore-Tex. That's which are our future, what we're gonna go towards. The internationalization of production was something that we started in 2007. In 2007, we have, about 10 years ago actually, sorry, in 2014, we started investing in China. The reason why we invested in China was because most of the manufacturers were moving the production site to China or Southeast Asia. The idea for us was not to work with, not to have our collection replicated, but to do our own strategy. With that, we actually realized there was a potential to grow with new technology, and so we added also a production in BATM. Now, these three collection, we have Limonta 1893, the Italian collection, the collection of East, which is a collection that we do in China, and the collection of BATM, which is a collection we do in Korea, are three different identities will help us to segment the market. So instead of working just with Moncler, the Louis Vuitton, now we can work with the Nike, now we can start working with the North Face, now we can start working with the Hello Yoga, with the Lululemon, and work at every level of the market with three different identities. Sustainability. Everything we do, I'm trying to go fast so we can talk about now. Everything we do, we try to do with a hint of sustainability. We have in mind what's important for us, so create everything with that in mind, and we have a plan and a process already in place. I'll let you read the part, and the most important, I'll give you the numbers. The most important part that you see here is how we produce. It's almost 80% of our yarn now are completely recycled, which is a requirement will be on the market very soon. And we have partnership with yarn supplier to a point that in 2025, we're gonna launch yarn made by Limonta requirements with our own branding, that we offer the brand to have our own labeling expanding into other realm of the quality. I'll pass on to Paola.
First of all, thank you for the invitation to TIP. And let me say that we are proud to be part of this prestigious group of companies. I think that Massimo explained very well the situation of Limonta, our company. Massimo is one of the young managers that we hired in last years. And we are building a very skilled, committed and capable group of a team of work which will be ready to face the challenges of the future, which will be very, of course, demanding. When we signed the contract with TIP in 2021, the strategy was clear. The idea was to grow both organically and by acquisition. What happened is that so far we have been able to complete just one acquisition, which is BATM, is a Korean company that we acquired mainly for two reasons. The first reason is that in Korea they excel for production of what they call lifestyle fabrics, and which is a different product that we produce in Limonta. And so we have been able to complete our range of product with this acquisition. The second goal is more geopolitical. As you probably know, many of our customers, they are, let's say, not officially, but they are asking us to offer another alternative in Asia for their supply chain, because they want to move from China. They are very worried about the future situation, the evolution of the relationship between US and China and the situation of Taiwan. So they practically, almost all of them, they are moving the supply chain outside of China. We expect in 2025 to have more acquisition. We have a pipeline of many interesting opportunities. So we are working on these opportunities, and as I repeat, I expect that next year we will be able to complete at least one or two acquisitions. We want to grow through organically and through acquisition. Acquisition, we are focused on completing our range of products. For example, we are interested in acquiring a printing company or a knitting company to complete our range, and or, for example, in the interiors business, we are not producing velvets for furnishing and upholstery, and that would be a very interesting product for us to add to our offer. I briefly come to the figures. As you can see, our problem in this year is growth because we passed from 2022, our turnover was 195 million. Then we decreased to 186 in 2023. Also due to the fact that in these 2 years we worked also on rationalizing our production, and we get rid of some production not strategic for us. For example, we were producing wallpapers, but we decided to, let's say, to quit that market and focus only on the strategic businesses. 2024, we expect a turnover of 120 million, maybe 1 or 2 million more. We have been affected this year, as you probably know, from the situation of the luxury brands, who are our main customers. Most of them are facing difficult times. And as you probably know, yesterday also LVMH, they presented their third quarter report. For the first time, unfortunately, in the last 4 years, they had a decrease of 5% in the fashion and leather goods business, which is their core business. Apart of that, we are, in any case, confident for the future because we have some new projects coming ahead. Coming to our EBITDA, in 2022 was 40.4 million, in 2023 44.2. We expect at the end of this year to land at 37. The net income 2022 17.9, 2023 27.4. Forecast for 2024 is 25. Some words about our cash position, which is positive. As you can see, we had 89 million euro net cash position in 2022, 128.6 in 2023, and we expect to land on 93 million in 2024, due also to the fact that we distributed this year in July 50 million euro dividend. So the net cash position expected at the end of 2024 is significant. For us, represent a catalyst for the group growth of the future. We have exceeded time, so I stop here and thank you
very
for
much. Thank you.
attention.
Thank you. So, the next one is Luca Ferrari. This is co-founder and CEO of Bending Spoons. For us, it's a new world. So, Luca, thank you very much.
Hello, can you hear me? Yes, you can. Nice to be here. Thank you for having me. Thank you for the invitation. All right, so who are we? What do we do? Maybe some of you have heard of us before. We're a technology company, an unusual company. Most companies are built to create a particular product or relatively narrow set of products, and that's a perfectly sensible way of building a company. In our case, we took a different approach. We built a platform, technologies, expertise, talents, company culture, data, fully optimized for acquiring existing digital technology businesses with untapped potential and then transforming them so they can be more successful. This happens in 2 phases. Phase 1, after the acquisition, we join, when I say we, I mean a lot of colleagues from Bending Spoons join the acquired business at all levels, not just managerial levels, but individual contributor positions too, and spend a few weeks, sometimes a couple of months, studying everything important about the business down to the finest details. And then we regroup and define a vision of the most successful version of that business we can imagine. And that's when phase 2 starts. In phase 2, we get to work to close the gap between the status quo and that vision. And the change generally spans the full spectrum of components of a business, from the technology to the user experience, the marketing, monetization, organization, processes, everything. So I like to joke that Bending Spoons is a bit like the baby a private equity firm and Google never had. From a private equity firm, we take the focus on acquisitions, financial savvy. From Google, we take the fact that we are technological operators. Most of our time is spent building technology products. We roll up our sleeves, get our hands dirty, actually doing the work. It's an unusual combination. I'm not aware of any company quite like us, for better or worse. It's been reasonably successful for us over the past 10 years, 11 really. We've been able to grow to about $700 million in revenues this year, and we serve 200 to 300 million monthly active users, depending on how you define an active user. And we've been profitable every year since our foundation. So what does it work? Why have we been able to do well enough with this approach? There are different reasons. The first one is the platform I mentioned. It's taken a lot of time and sweat, blood and tears to build this platform, particularly the insights, the know-how, but also the technologies. I'll talk about that in a moment. Our employer brand, our talented team, our company culture, everything has been optimized, and we continue to improve it to do exactly what we do, which is acquiring and transforming digital technology businesses. This is a massive advantage, both at the acquisition phase, because when we face off with, say, a private equity, because we can generate greater value from a business thanks to this platform, we can also bid higher. We haven't lost a process as yet. Well, we did lose one in 2019, but because we didn't have the money, not because we wouldn't have offered more had we had it. The second reason is structural. There are efficiencies to be unlocked by bringing together multiple businesses under the same umbrella and integrating them deeply. I want to stress this again. We transform these businesses often down to the software, rewriting the code base, changing the user interface. Like we truly integrate pretty deeply, and so massive efficiencies are unlocked. Not just some obvious ones like, okay, you just have a finance team. Sure, that's maybe 1% EBITDA margin, but or additional percentage points in EBITDA margins. But truly, most of it is being able to move around R&D people toward the opportunities for greatest impact without being psychologically incentivized to look for value where value isn't to be found, which happens when you only run a pretty specific business. It's really hard to say, we're done here, we should be looking for something entirely different. It's pretty easy when you have a diversified portfolio and you keep adding to it. And of course, as you build technology, you can share it across all these businesses. That's much more efficient. For example, we built our own payment platform, so to say, that's integrated with all the, the Stripes of the world and the very same technologies used across all our products. Or our A/B testing platform that's also used across all of our products. And on and on, there are about 50 such technologies we've built over time. And then lastly, this specifically relative to a private equity. Of course, a private equity generally works with funds. They have to sell a company. That's a very successful model, of course. We buy off our balance sheet, typically to hold and operate forever. We haven't really sold anything of substance so far. And this makes certain targets interesting to us that would be not so interesting to someone if they have to sell it within a few years. We have over 100 products. The main ones, we list them here on the slide. Evernote, one of the main productivity suites globally, acquired it almost 2 years ago. Issue, to my knowledge, #1 digital publishing platform. Globally, Meetup, #1 real-life event organization tool. Remini, the leading AI-based video editing and image generation tool on mobile. I'll talk more about it later, but Remini has over 100 million monthly active users. It's the second most used generative AI product in the world, only behind ChatGPT, which I think has maybe 150 to 200 million monthly active users. Splice, a leading mobile video editor, StreamYard, the #1 video recording, video streaming platform globally. WeTransfer, a file storage and sharing tool. We're very diversified. You see a wonderful pie chart here. And we're also diversified not just by product, but by currency too, by geography. We're a little bit all over the place, with the US being our #1 market, but even there we only generate about 40% of our revenues. And also by main, let's say, payment platform, as we have the Apple App Store as a platform, we have Google Play, we have web with multiple providers, Stripe, PayPal. Our markets are large. I don't think it's especially interesting to linger here, but whether you want to categorize it as consumer, mobile, or SaaS, and everything in between, we're a speck of dust relative to the market we operate in, so we do not see any saturation effect kicking in the foreseeable future. We've been able to grow largely through our reinvested earnings in debt. We also raised capital in moderation here and there. We're happy with a strong roster of investors. Of course, TIP was the first institutional investor to believe in us. Very grateful for that. It's been a wonderful 5 years together, I think. I could not recommend them more as an investor. And in recent years, we have welcomed also other international investors like Baillie Gifford or Durable Capital. We still, as a management team, as a co-founder team, own around 2/3 of the capital and of the votes, which could be a good or bad news depending on your views on our abilities. We've grown reasonably rapidly over the years. Revenue-wise, as I said earlier, we are about $700 million this year. CAGR has been 50% over the past 5 years. We've been highly profitable every single year, and growth has been driven, of course, by the acquisitions, which is our #1 engine, and also by growth of each of the acquired products. Our transformations have led every single time to growth at a minimum in the couple of years subsequent to acquisition. So now let me tell you a little bit more about the platform I mentioned earlier, so it's not as abstract as it may be at this point. A good way to think about it is the hard part, technologies, the expertise, the data, and the software, but in my view, more important part of our employer brand, the talents, the company culture. With regard to the harder part, the tools, the expertise, we could talk about this for a long time, but the short of it was we built a lot of proprietary tech that we leverage to run these businesses more effectively, more efficiently. One example is Minerva. What Minerva does is it it's a machine learning tool, first of all, it's a fully automated tool, predicts user behavior years into the future. So as we acquire millions of users, Minerva will observe certain behavioral patterns over a few weeks or months and then project what these users will do over time, thus telling us on average how much we should expect in terms of revenues from that user, for example. And this is paramount for a lot of things we do, from very basic things like, but important things like optimizing pricing. We can test various price points and see which one is most efficient, to more sophisticated things like optimizing the broader user experience or acquiring users and customers through paid advertising channels, and Minerva is key in that regard too. It works nicely in tandem with a bunch of other automations, for example, enabling us to run very finely tuned advertising campaigns across channels such as search channels, whether it's Google search or Apple search ads. And here our tools will look at each keyword or key phrase, millions of keywords, and adjust our bid, how much we're willing to spend to acquire a user, continually every few minutes over multiple languages, and for all of our products, based on the knowledge of the value of each user that Minerva and other tools provide these sort of automations with. So it's an ecosystem of tools that whose value becomes greater in many cases when they're brought together. There are many others, probably not worth spending too much time on, but Lumen is our essentially a data storage and analytics layer. We use it across the board. Pantheon helps our AI researchers deploy machine learning models in production at scale, and also A/B test different versions of the same model, which is very important. Role model supports our recruiters in dealing with the incoming job applications and making good decisions, including with AI. I'll talk a little bit more about our recruiting in a moment, but role model is a powerful tool for us in that regard. And now on to the softer, but more important, as I said, part of what we do of our platform. We're blessed with a strong employer brand and a great appreciation of our people. We call ourselves Spooners working at the company. We have very high levels of satisfaction, only about 1% unwanted team member churn. Most companies in technology have around 10%, some even as high as 20%. Consider that the people we hire could go work at Google, at Apple, at Meta. Typically, it's not easy to retain this sort of professional, but we are blessed with essentially perfect loyalty so far, at least. Some of the highest scores on Glassdoor, at least of those I've seen, and we've won a bunch of awards as one of the best places to work in Italy and in Europe. And it's not, I'm often asked why is that the case? It's not about the benefits, although those help. The key factor why people want to work at Penny Spoons and stay is the talent density. They were obsessive when it comes to keeping the bar extremely high with the quality of our teams, and talented people, ambitious people want to work surrounded by even more ambitious, even more talented people. So if you can be uncompromising when it comes to that, over time a virtuous cycle is ignited, and it becomes a massive competitive advantage where these people will tell the other people they know who are exceptional they should come over, and then nobody leaves. In fact, let me see if we put it here. Okay, we didn't put it on the slide, but my favorite review on Glassdoor says something like, "This job is so good that I'm stuck here forever," which I thought was funny, but also the best compliment a teammate could ever give a company. As I said, we are a highly desirable place to work based on anonymous white label surveys we ran over the past few years. We tend to, at least in Italy and Southern Europe, come out generally a little bit above Apple and a little bit below Google. We've been catching up, we'll see, and definitely above of other sought-after brands like Microsoft, Meta, Amazon. Last year we received 100,000 job applications. This year we expect to receive about 400,000 unique job applications and only hire about 100 people, so 1 in 4,000 people who apply in 2024 get a job offer. And job offer acceptance rate is about 90%, 95%. So as I said, we drive growth through acquisitions primarily. The way we approach them is not so interesting. I think most of it looks a little bit like the process a private equity would run. We have a big pipeline of possible targets, 5,000 new companies added over the past 12 months, and then we trim it down with analysis and rules of thumb, yada yada yada. Ultimately, we acquire only a handful of companies. We try to be very selective, patient, and disciplined. The part where I think we stand out a little bit, of course, the main part is post-acquisition, the transformation, the platform. But there is at least one unusual aspect pre-acquisition, which is I believe we're more sophisticated and scientific in projecting the potential of a particular company, at least in our sector, than the overwhelming majority of our competitors. And this is due to a combination of factors. One is just culturally, we are a highly scientific, rational company. We have a big advantage in acquiring so many different businesses. Of course, we can see patterns, and we have a lot of data we can leverage. And lastly, because we're so hands-on and we transform each, and we're in the trenches looking at the details, that will typically give us a major edge over again, a private equity firm, which would be naturally a little bit more shallow in their interventions. So all in all, this part is probably not the most interesting, but I figured you want to know about it anyway. And let's conclude by talking about two examples. One is Evernote. Evernote is a productivity suite, one of the oldest, to my knowledge, in the world. It's been around for 20 years. It's been used by 250 million people. We acquired it a little less than 2 years ago, and we have since completely transformed it. Well, we're not done with it, but we are probably 50% through a transformation. We have re-architected most of the IT infrastructure, going from a kind of awkward cloud infrastructure to fully native cloud infrastructure. We have rewritten some of the most critical parts of the code, and we're about to dismiss a major, we call it the monolith. It's a huge Java 11 file that was running the whole Evernote. It's terrible practice in software engineering to just have one file, 20,000 lines. You could imagine that every time, it's like having a document of, 1,000 pages where every time you change a section or a paragraph, you could break everything else. You'd never be able to expand that document effectively. It's similar with code, just worse. So we've been working hard on dismissing that massive file, and we should be done this year. We've improved performance, reliability, redesigned the UI completely, so it's much more modern and fresh. Launched many major features, including AI search. With Evernote, you couldn't search with AI before, so search results. Search was actually pretty good, but search results were always just a list of notes, which is not ideal if you're looking for a conceptual answer as opposed to you're looking for a particular note, which is like 50% of the time for people. And now the tool answers like a personal assistant would. It will read your notes, the relevant ones, put together an answer that draws from different notes and present it to you. The notes are referenced. You can also read all the sources, but it's way more efficient in about one case in two. And we've also launched by now over 100 what we call quality of life improvements. These are smaller features, refinements, bug fixes that have greatly increased user experience. Customer support tickets are at the lowest point ever. Customer retention is the highest it's been. Revenues used to be stagnant around $90 million. They're now at about $130 million. And Evernote had lost quite a bit of money historically, about $250 million in its entire history, and is now profitable. Oh, and also it used to be run by a team of about 400 people, 370 people, and it's now run by a much smaller team. So we've been able to, by going leaner in terms of operations, we have actually at the same time been able to improve the rate of improvement and innovation of the product. Another example is Remini. It looks entirely different on the face of it, but the approach underneath is essentially the same. Remini is a photo enhancer based on AI, so you input a photo, maybe a blurred photo, maybe a low resolution photo, and it helps make it sharper. We bought it 4 years ago from a tiny Chinese company. This was an asset deal, so we didn't get the team here. And we have since completely rebuilt it. There is nothing in today's Remini from that product. Not a single line of code is the same. Not a single pixel on the screen is the same. We dropped a lot of features. We added new ones. And last year, we introduced a set of features we call AI photos, which is generative AI used to create synthetic images that look like a photo of a user that was actually taken in real life. That was a major breakthrough. As far as I can tell, we were the first in the world to do that. The app, for a while, was the most downloaded globally. It's still one of the most downloaded apps in the world. But at that point, at the peak, millions of people downloaded it each day. When we bought it, Remini generated about $10 million in revenues. Today, it's a $140 million product, also profitable. And again, as I said before, this was a complete transformation, starting from a valuable, good seed of a nascent brand and a good customer base. I think that's it. Yes, it is. Did I make it in time? Thank you very much.
Thank you very much, Luca. Thank you very much. And I say we are very proud to have a unicorn that is not losing money. I think it's a unique example also worldwide. So next, I ask to Valerio Fonseca to join us. Valerio, ciao, sorry. Valerio is co-founder and CEO of Joybe.
Good morning, everyone. So after so many incredible companies, difficult maybe to say something interesting, but at least I guess that maybe we have one uniqueness in the portfolio of Tamburi. Maybe we are the only company founded by an ex-employee of Tamburi Investment Partners. So maybe it's something unique, at least this. I started with an internship there just after university, and I remained there for 4 years, and then I quit, and with the bonuses paid by tip. So thanks forever. I founded Joybe. Let's go to Joybe. Joybe is the first and biggest integrated management platform managing residential products, so apartments and residential buildings in Europe, offering living spaces for short-term, medium-term, and long-term solutions. So when we go to our offers, we are the, let's say, really focused and the leader in the co-living market. So co-living and shared apartments, what they are. So shared apartments are big units, big flats in which we rent a single unit to students and young professionals. And then in the units we have common spaces for them. Then we have also co-living buildings, so entire buildings, residential buildings that we rent them, and we sublease to students, young professionals. There are lots of common spaces that they can use, and also micro-livings that are students. So the target for that is students and young professionals. In that segment, we are the biggest in Italy, the biggest in France, the biggest in Europe, and one of the biggest worldwide. Vacation and corporate travelers always on some kind of residential products. So for travelers, companies, and business travelers. And we are also an important operators here in Italy in the student housing. So huge buildings managed just for students. When I say big buildings, I'm talking also about 10, 15,000 square meters buildings. Last year, just to give you some numbers, 200,000 guests that opened the doors of our homes all across Europe and started using also our, let's say, community hub. For example, we opened the first community hub here in Milan. Then I will tell you, I will be more precise on this. Let's go on our markets and numbers. We are in 7 countries, a huge position in Italy. Second, our biggest market is France, and then UK, and then also Spain and Madrid. 50 destinations, 4,000 apartments and villas and buildings under management. We are talking the value of these assets that are not owned by us. We just managed, we manage them. We are talking about 2 billions, 500,000 square meters. So it's quite an important number from my perspective. And last year, we had almost 2 million web users on our website. Business model. We have 2 main, from one side, we have landlords and real estate operators, and then customers. Who are the landlords and investors? Private owners, so everybody that has to lease and to rent the units. We can be the perfect tenant for them. Institutional real estate investors, and also property developers, so operators that wants to build greenfield deals and get in touch with us to have support in how to build, what to build, all the project management, and also to have a future tenant for the asset. How do we do this? Or with the rent-to-rent model. So we rent this unit or buildings with a long-term contract, and we pay the rent as a normal tenant, but an institutional one. Or through a management contract. So we share the revenues with the landlords and the investors. It depends on the appetite for risk or not a commercial risk with the counterpart and the partner. Why they select us? Clearly, we are a reliable counterpart compared to the private tenant that you can find on the market, and clearly minimizing bad debts, indirect costs that are a lot. You have lots of vacancy on the market. You have lots of agency costs while the tenants is changing. Clearly, we ensure the income for them with a long-term contract. And we can support them also in selecting the best opportunity on the market to buy in a buy-to-rent model. So now we are investing also part of our energy to support investors that want to buy and to go into the residential market, that is the biggest market worldwide, from my perspective, in investing in a buy-to-rent model. Then going to customers, as I said, we have long-term solutions for students, professional couples, corporate clients, and soon, I guess, also in the multifamily. We will launch or by the end of this year or the beginning of next one, and also short-term, as I said. Clearly, why they select us for the quality of the product and services is an all-inclusive formula. So they see the units on our portals, they book it online, they pay, and they enter the units that are completely with furniture, with electricity, gas, maintenance, internet, is everything included. So they pay and don't have to care anything about the management of those units. And clearly we invest a lot in digital and in tech because we want to make all the UX really technological, and that's something that also the customer are appreciating a lot. Co-living, micro-living shared apartments, almost 10,000 beds under management. In 15 cities, more than 1,000 flats and villas in Europe in 30 cities, and almost 200,000 tenants hosted last year. Co-living buildings, more than 1,000, mainly here in Italy. And then the first community hub, we want to give also to all our tenants, to all our customers, the possibility to have a space where to co-work or co-study and to organize also events. And I think that in the future we want to add the service about the living space with some additional services. If we can go with the video, just to give some image of our products. Thank you. If you think at Europe, at the moment, there is no real brand for it. I think if you think about a living space in Europe, there is not a brand. Maybe there are some platforms like Airbnb in the short term, but there is a huge opportunity to build a brand, a platform capable to manage all the residential products and in a really fragmented market to establish a brand and operator there. Let's go to our numbers. In the last 10 years, we have been capable to grow 35% per year. We have been really concentrated in Italy and to scale until 2020. Then in 2021, we realized, also thanks to the investments of Tamburi Investment Partners and Starwood Capital, 2 important acquisitions, then I will describe a little better, entering in the UK, in Portugal, and in France. And then we started again to grow organically quite a lot from my perspective, realizing important organic growth in France, in UK, and Iberia, but also in Italy. We are mainly focused in rent-to-rent model, so we're mainly rents. But when the landlords have some kind of appetite for commercial opportunity and the kind of risk, we also do the management model. Mainly concentrated in long term. We will remain an operator mainly concentrated with long term, but we integrate and we will integrate our offer also with short term. The idea is to give to our customers the opportunity to simplify the way they can access to all our units. Our idea is to build a platform that when a tenant, a customer, enter into our platform, they can, in a simpler way, use all our units and become their units. And we are also investing in managing units with a hybrid model. So during the year with the long term and during the summer with the short term. We can go proven capability to consolidate. Clearly, we are talking about a huge market, really fragmented. We are the biggest operator, even if from my perspective, we are quite small compared to the potential of the market. And we started in 2019 to consolidate operators. The first important one was Place4You, was the second biggest player in Milan in the co-living market. We acquired them, pay a multiple of EBITDA, we cut all the costs, and we were capable to integrate directly the contribution margin, optimizing also the revenues because we started to sell those products in our platform. Then we acquired student housing. We wanted to acquire, in this case, the know-how to manage huge buildings, because also in the residential market, there are lots of operators that are starting building huge asset for residential purpose. And we wanted also to expand with this product line. And then Altido, this one, in 2021, we decided to transform the company from a co-living company to a living company, and so capable to offer short, medium, long term. So we acquired Altido, that was one of the main platforms in the short-term market in Europe, with operations in UK and in Portugal, but also in Italy. And we were capable to, in 3 years, passing from 7 million up to 25 million, and with a negative EBITDA to positive EBITDA. Chaîne Store was the leader in the co-living market in France, a perfect company, and we were capable to more than double in two years and make 3 times EBITDA since we acquired them. We are talking about a huge market. If we see the rents in Europe, we are talking about almost 400 billion of rents. And it's growing because of many reasons. First of all, because people, when they look at a residential product, they prefer day by day more renting than acquiring. So the market is growing. There is a lot of mobility and urbanization issues, and also social changes. Then I will describe why. But you are talking about a huge market and growing and really fragmented. Urbanization. People are always year by year moving into the cities. This make the demand for rents and for units increase, and the forecast is always the same. Affordability, a huge issue. Buy units, buy apartments has become, compared to the salary, quite difficult. And so rents is the solution for this problem. Social changes. People are getting married always later and later, and so postponing the decision to acquire units when they get married, and so the rents are growing, and also mobility. People are traveling for work, traveling for labor, everything, so it's easier to rent units than acquire units every time that you move in another city. Leadership, if we see Europe, we are the biggest operator in Europe. The other ones, Habit is a second player. We are the only biggest one already profitable. We have been always profitable at the EBITDA level. Only in 2021, we had the full year of pandemic. But we are a profitable company from an EBITDA perspective and a market leadership in Europe. Some differences with the competition. Clearly, we have demonstrated to grow with many business lines and in many countries, and now we have lots of data that we can use for reducing the risk of execution and underwriting risk when we see units and when we see growth, and it's something that nobody has on the market, because the other operators are mainly focused in one vertical product and in maybe in one region, could be one city or could be one country, so really fragmented, and no one has got such a huge knowledge. Also know-how, we've been doing this business for 20 years, and so we have also a history of execution and managing and operations. This is really a difference with compared to the market. And now we have the opportunity, when we see an asset, to decide which is the best way to manage and to make profits with that asset. 5 years ago, we were obliged to see only that assets with a co-living model. Now we can see with a co-living, micro-living, we can see as a short-term product, so we can see that asset and say, okay, the best way to make profit with this asset is this one. So really flexibility that can make leveraging on our pipeline. Tech, we have 40 people in our tech team, and we are digitalizing all the process. It's a long-term project, really difficult, but we are building a unique an infrastructure from my perspective, clearly giving us a difference with the market, because all the other operators are really small and don't have the sites to make these kind of investments. Clearly, this is impacting operations, and so the capability to also to have operations capable to be the perfect consolidator of the market or this in a really fragmented segment. Thank you very much.
Thank you, Valerio. And now, last but not least, Stefano Luisotti, founder and CEO of Vianova. Thank you.
First of all, I would like to thank Tambour Investment Partner for this invitation. Vianova is an Italian B2B fixed and mobile operator with an asset-light approach and a high return on invested capital. On the screen, you can see our network operation center in Pisa. Today, I would like to help you better understand our group. We will begin with who we are, a brief introduction to our company. Next, I will guide you through how Vianova works, highlighting our core values. And finally, we will take a look at what's next. I think there is a video.
Vianova, good morning. Vianova is a fixed and mobile network operator dedicated to enterprises. Our customer care answers within 3 rings without automated responders and takes care of your needs, respecting your time. An advanced monitoring system designed by our developers detects traffic volumes and the status of each customer's lines every minute. Vianova's data centers are designed and built with security, power, air conditioning, and redundancy systems. In a protected and always connected environment, our facilities host the technological platforms for providing fixed and mobile network services. Vianova's offer is exclusively dedicated to enterprises. It is enriched over time with new services included in the price and applies all available technological improvements. Companies that choose us have complete control over the costs and active services, ensuring an unmatched transparency. With Vianova, you can measure the consistency between what is promised and what is delivered. The Vianova network is based on a next-generation infrastructure and enables the provision of telecommunication services with the highest levels of security and low latency. In addition to offering you the best access technologies, we are the only ones to route voice and data traffic on separate and dedicated channels to ensure you a higher quality of service. A network of partner companies specialized in information and communication technology guarantees our clients a local presence at a national level.
Vianova. Call our 145 number. We answer within 3 rings.
Thank you. To begin our journey into who we are, let me show you a visual representation of Vianova growth from our foundation up to today. This graph illustrates the evolution of revenues, the upper blue line in euro millions, and EBITDA and net result as a percentage of revenues, the orange and light blue lines. Vianova was officially established in 1999, but our experience in telecom industry and software development began earlier. Before founding Vianova in 1992, we developed an account software for corporate telephony, then evolved into our current billing system. In 1995, we launched our first 3 internet nodes in Italy. And in 1997, we founded a phone traffic reselling company. Let's now concentrate on the first period of the graph. In 1999, with the deregulation of the Italian telecom market, we founded Welcome Italia, the former name of Vianova until 2021. Welcome Italia was one of 240 so-called dot-coms born during the Italian bubble period. Most of them went bankrupt within the following just 5 years. As you can see on the graph, the first year of our company did not produce a great result, but it was for us a great period, a great learning period. So in 2007, we made 3 key strategic decisions that laid the foundation for our future growth. First, we discarded non-strategic businesses to focus on our core strength. 2, invested in our own infrastructure to ensure full control of operation, improving margin and service quality. And 3rd, we developed a premium price, unique selling proposition offering with a branded as Vianova, that in Italian means new way. So, thanks to the described decision, the second and longer period of our group delivered significantly improved results. From 2007 to 2023, the revenues grew from 23 to 82 million euros, and the EBITDA margin triplicated from 9.2% to 27.7%. This progress was driven by 3 key developments. First, the inauguration of a new Tier 4 compliant data center located in Pisa. The second, a network infrastructure upgrade, including 2,500 kilometers of fiber optic backbone, and spanning across northern and central Italy, where most part of our clients operates. And third, the launch of our mobile services, fully integrated with our fixed one. In 2024, we initiated an ambitious M&A program, acquiring 3 of our best-in-class business partners. Each one of them will acquire several other system integrators to pursue 2 main purposes. First, to increase both organic and inorganic growth of the group. And second, to increase the efficiency and margins, thanks to Vianova capability to instill and deploy a data-driven organizational culture. So, over the past 5 years, we have achieved an 11% of revenue compound annual growth rates and we will surpass 100 million euros in 2024 performance revenues, which includes 20 months of performance from the companies acquired in 2024. Our EBITDA grew from 16 million euros in 2020 to almost 28 million euros in 2024 performance, supporting the cash generation and our M&A growth strategy starting in April 2024. So, what does Vianova do? Vianova is a vertically integrated group that delivers premium B2B services across a range of sectors related to communication and information technologies. Our proprietary telecom infrastructure allows us to serve, with love, over 70,000 Italian companies, facilitating seamless fixed and mobile convergence. Our unified communication and collaboration cloud platform serves over 150,000 users. We offer cloud and data center services through our 3 proprietary data centers, including 1 tier for compliance, with a total capacity of 3 megawatts. We offer cybersecurity services like vulnerability assessment, phishing training, and firewalling, delivered via a proprietary cloud platform. Following the M&A strategy, starting in 2024, our group is now directly involved in the ICT system integration industries, providing managed services across telecommunication, information technologies, cybersecurity, and networking. At Vianova, we believe that controlling the infrastructure, technologies, and expertise is essential to consistently delivering the highest quality services to our customers. I share what Vianova does, but this is not the answer to the question why our clients choose us. The real answer is not what we do, but how we do it. At Vianova, every action is driven by our core values: respect, service, excellence. An example: we think that making a customer wait on the phone is simply disrespectful. This is why we promise to answer everyone within 3 rings and without automatic responders. We don't believe we are doing anything extraordinary. However, in the context of our industry, this commitment stands out as something remarkable, and is reflected in our 96.7% of customer loyalty rate. We spoke about respect for customers' times, but each value works better when in combination with the other values. For example, to answer within 3 rings is great, but our value of excellence suggests not to exaggerate. So in this case, our specific goal is yes to answer within 3 rings, but just on 95% of time. Excellence does not mean to be perfect. The reputation of an honest company that you can trust is our most valuable asset. For this reason, since 2007, we have launched the Value Over Time project that rewards the loyalty of our clients. The project is inspired by the corporate values of respect and service and guarantees all clients automatic adjustment to the best supply conditions provided by our most recent offer. Since 2007, we have voluntarily provided our clients with 115 technological improvements and 22 price reduction, and without our client having to do nothing. For Vianova, excellence is synonymous with continuous improvement. That means, 1, focus on objectives and key results to set clear and measurable goals across all departments of the group. 2nd, focus on innovation, supported by our team of 100 developers. 3rd, focus on efficiency, thanks to our 16 industrial processes with over 1 million code lines in-house developed. 4th, focus on training at all levels of organization, ensuring that our teams are consistently growing and evolving. And for last, focus on planning and control to ensure that the objectives are rigorously tracked and aligned with our long-term strategy. Pursuing excellence requires motivated and responsible people who feel free to act. Maria Montessori stated that an individual responsibility is closely linked to his freedom to act. By limiting his freedom, we also limit his responsibility. The great success of agile methods, inspired by Montessori principle and fully adopted in Vianova, suggests separating the responsibility of those who decide what and why from those who decide how. In Vianova, the management decide what and why, and all the others decide how. This is how Vianova works. Finally, having discussed who we are and how we work, let's now shift our focus to the future. We're following a dual approach to grow, organic and inorganic via M&A. Our organic growth depends on investment already made in the past, and the key driver for future included these 5 points. 1, the full ramp-up of our mobile business, sold both directly and through a new white-label wholesale platform. 2nd, launch of our unified communication and collaboration services through a new white-label wholesale platform yet. And 3rd, launch of our cybersecurity services through a new white-label wholesale platform again. 4th, empowering our cloud and data center services, as example, SAP HANA. And the end, expanding our voice and data access services supported by M&A activity in the system integration space. Our inorganic growth is focused on M&A of a system integrator and managed service providers. In 2024, we started our role as an aggregator of companies and entrepreneurs, driving their growth through the acquisition of other Italian system integrators and managed service providers. This strategy aims to support Vianova's organic growth and improve the performance of the acquired companies. In 2024, we have successfully closed 4 transactions, and we will plan to rapidly accelerate in this direction. Vianova is a company built to last, and as we imagine our future, our intention to go public has become a clear direction. We see an IPO as a natural and a functional step to support our ambition M&A program. We imagine a group capable of growing, attracting talent, and becoming a great place for workers, managers, and entrepreneurs who have joined us and will join us in this our long-term project. Thanks for your time and enjoy Eataly lunch.
Thank you very much, Stefano. Thank you. So here we are. We have kept the agenda, and I think that's already a very important goal. Thank you. On our side, I think we are very, very happy, and we hope that has been of interest for you. Our aim is to have once per year a certain appointment. I already have in mind which will be the next in terms of format, but as a starting point, I think we're very happy with, and we hope that you have got all the details and the flavor of all the company we are introducing. Gianni.
Thank you so much also from my side. And one of the exceptional things of the day is the fact that we have managed to keep 10 CEO of fantastic companies in the right time, and we are 3 minutes in advance, and therefore also this is an exceptional result of the day. Thank you so much, and we have a light lunch here and a small present for everybody.